Welcome to another episode of Bitcoin Magazine Live. It is Tuesday, August 16th, and I'm your host, Q, coming to you from Nashville at Bitcoin Magazine headquarters. And I'm joined by my co-host, P. How goes it, P?
It goes fantastically, as always. I'm already tired of my mustache, but I'm going to keep rocking it for now because it is hilarious and I look like Mario. We got some great news stories for you today. Then we have an incredible interview with Matthew Pines. It's going to be fire. Let's dive into it.
And then, of course, we also have Fed Watch. So jam-packed 3-hour-long episode, but we'll kick it off now with news and notes. First things first, Bitcoin miners, as of now, hold 27% less Bitcoin after 3 months of major selling. Miner capitulation. Shout out the Blockware Intelligence team, or Blockware Solutions, my apologies, team for keeping me up to date on the hash ribbon overlap, as well as a lot of minor capitulation going on. I believe the last thing I saw today was we are in day 63 or day 64 of minor capitulation. So the end is not yet in, but we are close. Chris, you got the next one?
No, I do. So there's an interesting story that just came out. The U.S. has banned the export of the technology used in 3 nanometer chip production, citing security grounds. So right now, we talk about chip manufacturing, chip forges, right? They're incredibly capital and resource intensive to build. They take about a full decade to construct from start to finish. The majority of chip foundries are located in Taiwan, which is why there's all this kind of macroeconomic and political interest around China potentially invading Taiwan, as we've been talking about on the show. So the U.S. has formally banned the export of 4 key technologies that are tied to the semiconductor manufacturing. They're basically citing national security. They're saying if these things, if the work that is being done on these technologies leave the United States, it creates a security risk, specifically around 3 nanometer manufacturing capabilities. So again, right now, the world is focused on, and we are currently able to produce 5 and 7 nanometer chips. And this is new technology that's being developed. The Bureau has specifically cited the development of weapons, and they're being classified under something called the Section 1758 of the Export Control Reform Act, which covers the production of advanced semiconductors and gas turbine engines. Now, the BIS statement that made this all sort of public made no mention of specific countries, but recent events have made it clear that the target of this ban is China specifically. This is something that was a big sort of topic in the Trump era, and even though that has died or that has gone by the wayside, these specific announcements appear to be tailored specifically towards China, as China is making noise around invading Taiwan. So we'll see what happens. Again, this is technology that is being developed as we speak, but it has implications because of the political environment of China potentially invading Taiwan. The interesting thing here is that they're talking about this from the perspective of weapons specifically, but these chips are used in everything. So I think that it's fascinating that this has broader implications for the entire economy, right? There was a shortage of cars and everything basically recently because there was a shortage of 5 and 7 nanometer chips. So I find it interesting that they are focusing specifically on the security implications of this, even though it has much broader implications for the larger economy.
Any comments there, Q?
I mean, my big thing is this technology does not exist. The closest country to attaining this is Taiwan, which, as P mentioned, is at risk of being invaded by China. But I need to really emphasize this point. TSM is the only company that has manufactured 5 nanometer chips. The next closest competitor has not even gone to market with 7 nanometer chips. So it is really TSM that is going to create this technology first. So the thing I take away from this more than anything is this is the US showing their hand a little bit and saying, we think that China is going to invade Taiwan. And so we need to have all of the contingencies in place to disincentivize China from invading Taiwan. If Taiwan's largest asset is chip manufacturing, and all of a sudden there is a ban on China sending out specific types of nanochips, there is no incentive. Well, there is still an incentive to gain control over Taiwan, but I genuinely believe US lawmakers are eyeing the potential TSM chip foundry in Arizona or the new Intel foundry that's being built as well as possible avenues to get the nanochips that we need here in this country to further develop our technology while then avoiding China and any sort of nightmare scenario that would be the invasion of Taiwan and our greater reliance than on China.
It's interesting.
Go ahead.
Go ahead,
Pete.
Chris.
You sure? All right. I was gonna say I think that this is gonna be like all gaslighting. It's like U.S. bans the export of chips to tech, but we need China a lot more than they need us. What I mean by that is, what are we giving them? U.S. dollars. What are they getting? What are we getting in return? Exports from them. So at the end of the day, it's like even if we ban them from getting tech, what they're going to do is like we're going to sell to an ally, and then China's going to buy from that ally in a discreet runaround way, or by three ways of separation. I just think it makes things more expensive for the end consumer, meaning mainly U.S. consumers. And I don't think this bans China or prevents them from doing anything. If anything, this harms the middle and lower class. Like it seems like everything basically. Go ahead, Pete. What were you say?
Well, I was going to say, I just want to be clear. This is not banning those chips specifically. This is banning technologies that are going to be used in the manufacture of those chips and technologies that are used to develop those chips. So it's, I won't go into specifics, but it's 4 specific technologies that are being used to research this. I don't think this actually is designed or or is expected to have an effect on China's ability to develop these technologies or Taiwan's ability to develop these technologies. I'll be curious to see if Matthew Pines has his opinions on this. I wonder if this is just similar to what you were saying, kind of political grandstanding almost. It's like, officially we're saying like, yeah, we totally agree. Like Taiwan is not separate from China, but then maybe this is basically saying like, yeah, but for real though, like, we're still America first. So I don't know. It is an interesting story though. Let's keep going.
For sure. So Alex Mashinsky, the CEO of Celsius, took control of Celsius trading strategy and tried to trade the Fed decision. What's this means? Basically, they were sitting on the tail end of a bunch of losses on the back of the 3 Hours Capital blowing up, as well as they lost a bunch of money in GBTC, as obviously the premium it's trading at a 30% discount to NAV or net asset value. So he took control, or I guess overrode basically their trading desk, and he was taking control of trades himself. What that means is he was trying to trade the Fed decision that he assumed that they were raising rates. So he figured that Bitcoin's price would fall. So in doing so, he took control of clients' funds and was trying to sell Bitcoin in order to buy back in at a lower price. Unfortunately, that did not work, and he ended up losing over $100 million on that trade. And yeah, does not look good for Celsius. Also, due to related in other news, court filings. So obviously they filed for bankruptcy just a few weeks ago, and court filings revealed that Celsius will run out of money by the end of October at this rate. Very, very interesting story that is developing. Q, P, do you guys have anything else to add there?
I mean, it's interesting to see these facts confirmed. It does not surprise me. I think everybody now understands that Celsius was like full-blown scamming people and taking unacceptable risks with client funds. And it's just very sad. A lot of people, had their life savings in Celsius because of the marketing. And it's very unfortunate.
I'm going to quote tweet what Alex Mashinsky literally told our lovely P here in a Twitter Spaces. Do you want more or do you want less? Do you want more or do you want less? As P continues to grill him about why does he need a token to run his operation, and he just kept quoting that ad nauseum to P.
Yeah, he had no good answer. It was all bullshit.
All right, well, moving on to Q. I believe this next story is yours.
Texas businesses. So we talk a lot about the necessity of Bitcoin mining, how it can be used, how it can be helpful. Well, the state of Texas is really seeing the benefits of increasing their energy infrastructure and then using Bitcoin miners to make up for the excess energy that they have just sort of within their grid. Look, we're seeing it happen in real time right now. Texas is that proof of work system for what happens when you actually invite in these Bitcoin miners. They've built out their energy infrastructure to be much higher than their necessary throughput on a day to day basis. But in moments right now, when they have a heat wave, well, what do they need to do? Most people need more electricity, they need AC. So the miners have been asked by the Texas energy companies to essentially shut down operations for a period of time while the everyday citizens are now using more electricity. When the temperatures die down, when everything goes back to normal, these Bitcoin miners will come back online and the state of Texas will continue to use the same amount of energy throughput very consistently. I would love to see more states, more cities follow this example, and more Bitcoin mining companies and businesses as they relocate, as they go and set themselves up into different sectors, into different jurisdictions. They should be working with the people in those areas to help them better understand their energy needs, the citizens' energy needs, and the larger energy needs of the future of our society. We need to stop acting like it's 1975. We need to start acting like it's 2140, for Christ's sake.
I like that you're like, forget the current year we're in. We're just going to go straight into the future. I don't disagree.
I think the incentives are perfectly aligned with this. So obviously, they're incentivized or they have power purchasing agreements, which means that the grid says, "Hey, we're going to sell you electricity, but in the event that we need you guys to turn off to give us more energy, we will give you more tax dollars or U.S. dollars in order to remain offline, but to keep your operation profitable." I know a lot of times, I think it was Riot Blockchain CEO was saying that they were actually making more money off the tax incentives. I know that's not something that Bitcoiners like to hear, but it is something that they constructed with ERCOT, I believe is the township in Texas, or the grid in Texas, that they have worked at a deal that, like, hey, like, in order to give energy back to the people and back to our jurisdiction, we will give you more of basically partially of the tax receipts in order to keep your operation offline and keep you profitable. Obviously, I think over time that these arbitrages will get, like, the market will arbitrage them away. But yeah, it's a very good incentive until Texas's grid gets more built out and more robust in the long term.
Fair enough. Fair enough. All
Hey, do
right.
you want to hit our next story?
Absolutely. So continuing the saga we talked about yesterday, Kevin O'Leary continues to advocate for increasing regulation in the Bitcoin space. He is quoted as saying, if there was a solid regulatory policy on Bitcoin, he says that, I swear to you, the price will be $60,000 in 2 weeks. And that may or may not be true. I happen to disagree with that statement. But more importantly, we're not here only for NGU reasons. That's never go up. We are here for Bitcoin as a freedom technology. And the reason that I care about Bitcoin, as I say far too often on the show, is that it allows us to take control of our own financial destiny. And asking for or desiring increased regulatory frameworks are not necessarily a good thing, unless what they do is they establish just that things are more open, which I can't imagine that happening. I think when we're talking about these people advocating for enhanced regulation, what they're actually advocating for is stricter policies that more effectively limit what can and can't be done with Bitcoin. And I think that's always a bad thing. So that's basically it. I hope that he will see the light in the near future.
I definitely agree with that. And I think the importance of, while Mr. Wonderful or Kevin O'Leary is obviously advocating for regulatory capture, I know that there was a thread actually going off something very similar, that this kind of shows the importance of self-custody. So not financial advice, but we obviously highly advocate to take self-custody. With more regulatory capture, it is more centralizing. And obviously they want to control not your keys, not your coins. They want to control your coins by keeping it in a larger entity, whatever it may be. So I think, obviously, if you want to do that, that's, you can do whatever you want through a 401k or IRA or whatever vehicle you see fit. But I think self-custodying your Bitcoin is much more empowering, and it's much more important. At least a portion of it, I believe, should be, if you don't want to do all of it. Speaking of Bitcoin, go ahead.
I want to comment on this because everything you guys have said is right. I just want to make people think about what O'Leary's perspective is here. What is he actually thinking when he says more regulation will help push the price of Bitcoin up to 60K? It's the fact that institutional money will feel more comfortable putting their money to work in Bitcoin. So I'm not agreeing with the statement. I don't want more regulation in Bitcoin. Everyone should just self-custody and move on from this nightmare and debacle. But that is really the sort of the clue that Kevin O'Leary is leaving in this statement. Not go ape into Bitcoin with the expectation of 60K. It's if you want the institutional money to come into Bitcoin, they would feel more comfortable as if there was more regulation. Again, not my stance, not what I believe. Just want to show you guys that's sort of what I think, at least, is the main message behind what he's saying there.
Definitely. I think that's very smart. Yeah. Bitcoin is continuing to grow. The price may be down. We may be in a bear market, but Bitcoin has just surpassed 1 billion unique addresses, leaving all other cryptocurrencies in the dust. I thought that this was a cool little tidbit. Basically, obviously, as people know, you can have one whole Bitcoin in one address, or you can have 10th of a Bitcoin in 10 separate addresses. But it's just showing the growth and propagation of the Bitcoin network. There was a unique graph showing Bitcoin compared to other cryptocurrencies, and Bitcoin is far, far exceeding them. Yeah, that was just a cool tidbit of information as the network grows. I know we've seen growth in the Lightning Network. We've seen blocks continue to keep coming in. We've seen, now over 1 billion unique Bitcoin addresses. And now I will kick it over to P for our biggest story.
Nope. I want to do the other story first.
Oh, okay. Go ahead.
So I just want to point out something because I've made this joke far too many times and it's no longer a joke. It's the way I think I truly see and view the markets. So despite what Jerome Powell said at the last FOMC meeting that they would not forward forecast, the markets have decided to go ahead and forward forecast what their expectations are from the next FOMC meeting. A couple of days ago, the expectations was for a 75 basis point rate hike. As of today, that has flipped, and now the market is expecting a little bit of a cool down with a 50 basis point rate hike in September. So the Fed is not going to come out and confirm or deny anything. They have said that they do not want to give the market any clues. However, the market has been spot on with almost every single one of these rate hikes from the first one of 25 basis points. What was that now? Like 4 or 5 months ago? Something to keep an eye on, but that would be a very interesting change of events if we get a 50 basis point rate hike. I know a lot of people were expecting that. So the market is now starting to decide with that expectation as well.
Our last story is that President Biden is expected to sign the Inflation Reduction Act at 2:30 p.m. Eastern Standard Time. The public reason for this is that it seeks to fight climate change, raise taxes on corporations, and expand healthcare coverage. This is going to be a $740 billion Inflation Reduction Act. It's essentially trying to fight inflation by printing more money, which will then increase inflation. So it's very paradoxical. It's just narrative bullshit. It's PR at that point. They are going to be embedded in this is $45 billion for digital asset monitoring, which will remain available until September 30th, 2031. So they are very, very invested in figuring out how to effectively regulate and tax the quote unquote cryptocurrency market. And I say quote unquote because there's Bitcoin and then there's everything else, which is basically affinity scamming on Bitcoin. The IRS is getting an estimated $68.8 billion of additional funding through this act. I forget how many new IRS agents are being hired. Chris, do you have the specific number? It's something like 88,000, right?
87,000 IRS agents. I know there's a running joke on Bitcoin Twitter that they said it is your Bitcoin civic duty to get an IRS job and not audit people, but to tell them to buy Bitcoin. That is not financial advice or job advice.
Genuinely, we talked about this in the meetup last week. Like, I so agree with that. Like, if every Bitcoiner were to just go get a side hustle of a job at the IRS, like they can't do anything to Bitcoin anymore.
Wait,
very hard to get.
Wait. This is a terrible fucking idea. To be clear,
or a great idea.
I'm sorry. Nope. P, you're wrong. This is a brilliant idea.
I agree with Q. We're getting
This
jobs at
is
the
so-
IRS. Q
If
and I
you
are
told
dapping it
me,
up.
if I worked at the IRS and I was told go audit that motherfucker, and then I realized you could go there a Bitcoiner, what do you think I'm actually going to do there?
Do you
What do you
think
think I'm
that
actually gonna
individual?
do?
Do you think that
Fun
individual
fact, I'm a
IRS
spook and I
agents?
really work for the FBI.
Do you
I'm
really
joking.
think that individual IRS agents that are being hired at this level have the authority to decide whether somebody like gets a deal or oh yeah, Q, you're already fucked, or like
Never tell
doesn't
you that, man.
get investigated? No, these are gigantic systems that are in place to there people are just tiny cogs in this giant machine that is designed to grind your bones into blood meal and then feed it back to your children. Everybody knows that's what the IRS is for. That's what it's designed to do. And people getting jobs there, like they're not going to be able to significantly influence policy.
Okay, no, Chris, you heard him say that, right? Tino, Andrea, Chris, myself, we're gonna go and we're gonna show you how effective IRS agents we can be, because when you ask us to do something, just like an IRS agent's boss will ask them to go audit someone, and then we come back and say, oh, they're fine, when they're really not.
You know, the only person we're auditing is P now. Now that he doesn't have faith in us.
I mean, you understand I've
Jesus
already
Christ.
submitted P's information to the IRS now.
I submit my own information to the IRS. P.S. Everybody should pay their taxes. Do not try to fuck with that. There's a reason that
I'm trying to be the gum in the cogs of the wheels of the machine.
guys are
I'm
idiots.
trying to gum up the
Guys are
machine,
fucking idiots.
P. I'm trying to gum up the machine.
This is the
How
most
did they
sober
get
I've
Al
been this
Capone?
week, and I can't tell you how funny this conversation is.
How did they get Al Capone? It wasn't through all the terrible illegal shit that he did. It was the fucking IRS. This is sort of like the last, or not the last gasps, but the continuing gasps of, unfortunately, if we continue to head down this path in America, a dying empire, right? This is... This is like the government basically saying, like, we have to invest even more money in capturing our citizens' wealth, because when you're printing so much money, the sort of the modern monetary theory solution to this is you print however much you want and then you just tax it away again. So this is them trying to increase the power that they have, that they believe they have, to effectively manage the economy. But it's all bullshit. It's going to fall apart. Pay your taxes. Do not fuck around with that shit. They will get you.
If you are unemployed and you are looking for work and you have applied to every job that's available on bitcoinerjobs.com, which everyone, if you're looking for a job in Bitcoin, should go do. Shameless plug, not a sponsor of the show. Go get a job at the IRS. Feel free to audit me. Like, just do it. I don't care what P has to say about this. You're wrong. You are wrong. Dude, if someone gave me an assignment and the expectation was I did it right, like go audit someone, and I come back to my boss and I hand them a form and say, like, I audited this person and all their stuff checks out, they're good. Like, what, they're going to send a second IRS agent because they're like, oh, like, I don't remember. I'm like, no, they're not going to do that.
We don't know how the fuck the IRS policies work.
Well, that's why we're infiltrating them, Pete. That's why we're trying to get in there and find out how these policies work.
You're overthinking this and you're wrong. I told you today, my new thing is I'm going to tell you when you're overthinking it and you're wrong, and you are overthinking this and you're wrong. Let's
see what Matthew Pines has to say about this.
Q and I are starting as junior IRS agents, and we're going to work our way to the top. And then eventually we become...
I don't need to be at the top. I just want to be like,
you guys are going to blow your brains out long before you get to that point. The monotony of that job and crushing people's dreams is going to get to you. And if it doesn't, you're a soulless creature to begin with.
You see, you're not I am not going to go, like, you're right. People who take...
Thank you. You heard it here first. End of conversation. We're done here. All right, moving on. What else we got to talk about?
We have nothing else to move on to.
I got two more things on this.
We're stuck on this conversation right now for the next 5 minutes.
Chris got his mic. Let's keep going.
So what I would say you are right about is you are a soulless creature. If you work for the IRS, take your job seriously and make people's lives miserable. Other soulless creature jobs include like being the first...
I need some alcohol for this conversation. Please continue.
I thought you've been drinking all day. You said you couldn't give me a ride this morning because you've been drinking all morning.
I mean, look, everyone has to, pick their poison, all that shit. Please continue.
So another soulless job that's out there in the world, in my opinion, is the people that like work at insurance, like the insurance claims specialists, because their job, much like the IRS, is to tell you like, oh, you're wrong. Like, no, you don't get this money. Like, this money is mine, ours. It's really not theirs. It's their fucking company that pays them like a shit salary or whatever. So All I am saying is like if I took my side hustle and instead of it being like weed related or all the other stupid shit I do, and I spent all that time either working at the IRS or even like an insurance company, for example, and I submitted claims to my boss and was like, oh, these people that you asked me to audit, the ones that are Bitcoiners, they checked out. The ones that weren't, like, oh yeah, you know what? There was a little bit more money. Like you do your job just good enough.
Sorry, what was that? The sensor that we have working for us just cut you
Do
off.
your job just good enough to not get fired from these places. And also so that they won't question when you do, like, you know, let the homie Q, when you audit me, like slide through the system. I see nothing wrong with this plan. In fact, I will double down and say this. If you go right now and get a job at the IRS, you get a ticket to Bitcoin Amsterdam.
What the?
I will personally buy your ticket.
every one of the. Oh my god! All right, guys, you heard it here
the
first.
conference
Q
is going to be free for like thousands of plebs going.
Q
to
just said he's going to personally pay for those tickets. IRS
use code
agents.
BM Live to make it a little less painful.
Yeah, use code BM Live, please. But yeah, if you go and get a job at the IRS, like get hired, and then go show me the proof, I will buy you a ticket to Bitcoin Amsterdam.
This is crazy. All right, I have 2 points unrelated to these things, but Q, you heard that here.
Save
Q's
us, Chris.
So it's very interesting. Obviously, we brought up that the digital asset monitoring, which will be available for 9 years. I look into this as basically they're going to go to a company like Chain Surveillance or a company like There Is, and then basically just try and negotiate a contract between that company and the U.S. government in order to track all of the transactions that are going on in Bitcoin and all other cryptocurrencies. I just think that is a waste of money. And obviously, I'm not one big fan for chain surveillance. I think another thing that was very interesting, too, that they say raise taxes on corporations. But I know Q brought up yesterday with Kristen Cinema that obviously she took a bunch of kickbacks from large corporations. And it does not look like this is all like grandstanding of like, hey, we're going to raise taxes on corporations. I didn't realize that the lower middle class were renamed corporations because without a doubt, they're going to be raising taxes on the lower and middle class instead of going after corporations. There was a great tweet like a week ago. I think I brought up on the show that there's only like 740 or 750 billionaires in the United States. And, they're hiring 87,000 IRS agents. So obviously not all 87,000 IRS agents are going after those 750 billionaires. They're going to have to find the money some way. And I think it's in the lower and middle class. Q, anything else to add there, P?
No,
we're good. My friends, as Q has so generously offered, if you do not yet have a ticket for Bitcoin Amsterdam, use code BMLive to get one. It's going to be a fantastic time. Also, of course, the censorship resistance issue of the magazine is out. As I've said before, it is my favorite issue so far. They somehow just keep getting better and better and better. Check that out. We're going to go to a quick commercial, and then we will be back with Matthew Pines. See you in a sec.
guys. Thank you for sticking through those commercial breaks and welcome back. I am excited to introduce our guest for today, friend of the show as well. No longer a friend of mine based on our Twitter interactions last night. However, Matthew Pines. How are you doing, sir?
Hey man, how's it going?
Wonderful, man. Um, I will let you introduce yourself because there are so many things that you've done that are incredible. I don't know which one's your favorite right now. So you can pick which one of your sort of resume checklist is your favorite that you want people to know about.
I'm a dad. Let's go for the cockles of your heart, right? You know, just
Aww.
gotta rack that one up. Yeah, no, so I'm a consultant. I spent about 10 years doing kind of different analysis for the government on different ways bad things can happen, both in kind of emerging technology and sort of geopolitical situations and natural disasters, terrorism, etc. And then switched about a few months ago to join the private sector at a firm called the Credit Stimulus Group, really delivering services for multinationals on the intersection of geopolitics and cybersecurity. So been interesting, kind of change of pace, more of like a startup mode. I'm also affiliated with the Bitcoin Policy Institute as a national security fellow there, help support the efforts to bring really informed, kind of more rigorous, objective analysis on Bitcoin and national security to policymakers, the larger kind of public policy conversation. So that's kind of the long and short of it. Yeah, the Bitcoin is kind of just like a side hobby, like an interest area. But yeah, focus on kind of geopolitics, cybersecurity, macro, that sort of stuff.
Love it. Well, let's dive in because honestly, perfect segue to the question I wanted to start things off, and it seems
Wait,
as
wait.
though
So sorry, Q. I got to interrupt. I got to dive into the first thing that Matt said. You said that you are a father. Is that correct?
Yeah, apparently, yes. Well, I've got two little things here that have half of my genetic code that yes, I have those obligations to.
And how old are they, if you don't mind me asking?
5.5 and 2.5. Two girls.
Whoa.
Yeah, so I'm outnumbered in the house. 3-1.
Amazing. Okay, so you are incredibly prolific on Twitter, and as I've told you before, I can pay you no higher compliment than I have you set on like always notify, and this like all joking aside, you just put out such consistent like high signal information. I imagine you in some sort of like dark control room. There's screens everywhere. There's like parchment inexplicably. There's paper everywhere. There's some vellum. You've got like a quill pen and then also like some, like a ballpoint pen, and you're using both hands simultaneously because in my fantasy you're ambidextrous. And I guess my question for you is, and I know I asked you something similar last time, but how do you consume as much information as you do, as rapidly as you do? That's question one. And then I have a follow-up question once you answer that.
Well, I guess the first thing is just curating how you get your information so that you don't spend as much time filtering out noise, right? So if you're getting high quality information, if I find people that you think are like me in terms of generating high signal data feeds, which is sort of how I view Twitter to a certain extent, is like there's kind of the fun side, but then the other side of it's basically just like a data feed, right? And you got to curate the data feed over time to make sure that you're getting kind of high signal input. So I've done that like over the past like year and a half. So just to kind of curate like what information I'm getting from different sources, and then it's more just kind of taking that in. Setting aside time to read, right? So try to read a book every week roughly, which is not like impossible task. I think people can do that. So yeah, I mean, just kind of paying attention to what learning like the heuristic over time about what's kind of just like the headlines. Like I don't actually look at like New York Times or CNN really like almost at all unless there's like a particular news event that merits attention. Like those are not, from my perspective, that high quality kind of analytical data feeds. It's giving you like updates on things that are happening, but that's not necessarily helping you construct kind of an analytical or explanatory narrative. And for that, you really need to seek out folks that are like the niche experts in their respective domains. And so that's what I try to find in all sorts of different corners of the Twitter space. Like who are the people that are like, that know their territory in and out. And then I just basically get to gain from, their years and years of sort of hard-won expertise. And I just learn how to kind of integrate and maybe parrot what they say. So yeah, that's kind of the general approach.
Got it. And then my second question is, as you have these two young humans that are slowly turning into fully functional humans and learning how to kind of process the world around them through the interactions with you and your significant other, how do you what do you do, or how do you think about your children in relation to processing information? Like, do you like read with them? Do you ask them critical thinking questions? How are you grooming them into being the as effective as you are in the world around them?
Well, the 5-year-old, I think, should stay off Twitter for a while. So I don't think I'm giving her
Fair point.
social
Fair
media
point.
tips. No, I mean, honestly, I just think the most important thing, at least I don't know if I learned it. It's just I was always curious, right? Like, if you don't actually have like a motivation to seek out information, then it doesn't really matter anything else, right? Like, you have to be curious about new and different things. And I don't know, like, that's just like, I've always been kind of a weird person when it comes to like learning different things, like physics or philosophy. That's kind of undergraduate. So I was always attracted to like really novel, somewhat sort of frontiersy sorts of domains of human knowledge, and just like acquiring information as like a matter of psychological compulsion, one might say. So yeah, I hope she doesn't have that compulsion. I hope she just has like innate curiosity about the world, and learns different methods to acquire the things that she's interested in understanding. But yeah, that's really about just unstructured orientation to a wide array of potentially interesting things, and then kind of an iterative process of exploration and kind of testing about what you actually find interesting, and then refining and categorizing, and then applying yourself. So I don't know, that's kind of basic like process of learning. But yeah, if you don't actually care, then it's not going to matter, right? But that is a problem, right? You can care, like, you can be obsessive about lots of things and just like obsessively collate and collect like an information hoarder, and then you're just, to what end, right? You're just, someone who knows lots of facts and can sort of spout off random things and sound smart, but it's like, what's the point, right? Why do you know all that stuff unless it has any sort of relevance to your decision making or policy, or informing some analysis of a particular problem? So yeah, that's the double-edged sword, right? You can spend months admiring a problem and going down lots of different rabbit holes and thinking you understand it, but if what's the purpose of that, right? It's kind of, that's always been a thing. It's just how do you make it goal oriented, or at least construct a goal that you can think about that information being relevant to. So yeah, with her, it's just play. The first order of business, I think, for everyone is just learning how to explore different ideas, and not to think about certain aspects of knowledge or sort of human affairs as being sort of off limits, right? Like, I think that's, as you can probably tell from my Twitter feed, there's lots of things that I tweet about that are sort of considered kind of, well, I mean, Bitcoin in like a general professional context would be considered kind of fringy stuff. I tweet about like UAPs or sort of random stuff in science. It's like, okay, this is just stuff I think is inherently interesting, and if you get like the icky feeling from a particular piece of knowledge, kind of question why you have that, and then think about
I
it.
love that.
Yeah.
I fucking love that. I was having that conversation last night with my buddy where I literally said, if I have an emotional reaction, whether it's like strongly positive or more specifically, like when I'm like, no, I can't, like that, what that person's saying is so wrong, it makes me angry. There's clearly something there that I have to spend time to explore. So I've always said I loved and admire your perspective, and I love hearing this. P, keep going. We'll hold off on my questions.
No. I mean, I've made a note here that the most important thing when raising children is to instill a psychological compulsion in them to absorb all the information around them. That's what I took away from that comment. Is that
you're just training a budding convolutional neural nets inside an expanding skull, and it's how do you make sure the training data is properly calibrated to optimize that neural net? Yeah,
that's the answer I was.
This is why the their mom is like a good balancer, because clearly if I was the sole father, it would be not a good outcome.
They'd just be these like unfortunate children with like hydrocephaly because their brains were so big, and they'd just be sort of like not able to function in the real world. Got it. Okay. All right. Thank you for entertaining my line of questioning. Q, let's dive into the real meat of this conversation.
I can hijack this now. I'm gonna ask.
Yeah. You got you got to like flex your fingers, crack your knuckles, get ready, and I'll interrupt you again within the next 5 minutes, and we'll derail it again.
Cool. I got to re-warm up. You guys don't really see my warm up while the dance goes on, but Matt, I'm gonna ask you what is largely considered now the most difficult question in public policy. Please help your friends in the public sector give them the answer that everyone is dying to hear to the following question: what is your definition of a recession?
Oh, come on. My definition of recession was sort of whether my paycheck is going up or down, right? But I guess my definition of the economic recession, really, it's an operation to that definition. Is whatever that the majority of economic participants would react to as a constellation of economic data that would require them to pull back on their future investment, consumption, etc. The NPER defines that as like 2 consecutive quarters of negative GDP contraction, as well as like other sort of technical measures they add on to that. I don't know. It's a very uninteresting question to me. I don't actually see how it's very that useful. But yeah, we're probably close to recession, if not in one, when they retroactively declare it. Look at various sort of leading indicators. That seems to be a very non-controversial thing.
So I accept the fact that you think that that's a terrible question. I stand by asking you that question. However, I loved your response of, well, it's based on my paycheck. And I've been long saying it's so long as I am employed, we're not in a recession. But should I enter unemployment, we are in a recession. Those are the rules of the game. I don't make them.
That is the terrible definition of recession.
All right, Pete, then what's your definition?
Well, if the purchasing power of your paycheck is going up, then you're not. And if it is, you're going down, right?
So have we just been in like a 70, 80-year recession in this country?
Maybe.
Yeah, you could say we've been in, like blank recession. You could say we've been like whether it's productivity recession, whether it's an employment, like a labor force participation recession, right? Like recession, this is the grammatical term, just refers to, the contraction of some quantity, right? Whether that quantity is economically meaningful to you or whether it's an aggregate, which is like itself not measurable, right? Like GDP is this like artificial construction, right? It's sort of economic fiction, right? It's things that we look at in the world, we measure those things, and we say that those sets of things mean this higher level concept. And so we imbue that higher level concept with some degree of reality when it's just an economic fiction, right? We constructed these kind of quantities, but they only mean as much as we interpret them. Like what you observe in your daily reality is like how many people actually have jobs, what's their income, what does that income get them in terms of like real energy and goods and services that they would desire, those sorts of things. I don't know. We can go back to, basics of economics, but that's probably not a very interesting conversation.
Fair. So what then is sort of taking up a lot of your time, effort, and energy domestically on the public policy side right now? I know you do a ton of work with BPI as well. We've seen a lot of regulatory efforts. What's keeping you up at night other than the girls?
Well, there's been some interesting, public policy works slowly, right? And so it's a matter of kind of shaping kind of a longer term environment. We're not engaged in like acute kind of lobbying efforts or anything like that. So it's about looking ahead to where the government and specifically kind of the executive order that President Biden signed several months ago, and kind of the resulting requests for comment that different government agencies have put out in different areas of their kind of regulatory purview. And so BPI has responded to some of those in areas that we think we have something useful to provide. So on like the climate and energy stuff, responding. So Troy Cross and Margot Pius kind of led the development of this response to the Office of Science and Technology Policy and the EPA on really trying to frame an accurate analysis of what Bitcoin mining really means to the grid and energy more generally. Try to rebut some of the FUD out there on kind of its consumption externalities, but also kind of create a more balanced analysis about what we do and don't know exactly about the future trends with regards to Bitcoin mining and the U.S. energy grid. So that's been an effort that was occupying a number of us over the past several months. A similar sort of response to comment for the Department of Treasury, kind of broader kind of how they think about digital assets, how they should think about digital assets, and kind of just giving this some informed analysis about different policy issues that they should be aware of the implications, potential future regulation on Bitcoin specifically. So yeah, that's been kind of the work of BPI. But also just doing some, kind of ad hoc advocacy in terms of like talking with people if they have questions and helping to understand, if they have questions about sanctions or that sort of stuff to kind of, respond to that. Obviously, the Tornado Cash thing is probably more relevant to Ethereum, but I think raises the specter of potential future action similar to that about kind of sanctioning addresses and compelling miners to build a block or not with a sanctioned address. So there's things like that, kind of the typical kind of policy conversation around Bitcoin. And then there's the action on the Hill with the Lummis Gillibrand legislation and some of the interesting kind of conversation that has precipitated now that this is a formal piece of legislation. Lots of discussion can happen around kind of the in the weeds, technical plumbing, and that sort of stuff. So yeah, I mean, I'm not super involved in that side of things. I'm not a lawyer. I don't draft laws. I don't really know the ins and outs of subpart B to the subparagraph A clause sorts of things. But yeah, I'm sort of keeping tabs on everything.
Okay, hang on. I gotta cross out a few questions off of this list. But just I think more high level. Is there any movement on this Lummis Gillibrand bill? I know that it was sort of the last I had heard was it's going to be sort of pushed until next year, so we're not going to see this vote. Is there anything different other than that last piece of news we saw?
Yeah, I don't have any update. I mean, I think a lot of it's all politics. It's all what happens with midterms and shakeups in like the leadership of different committees, and then like the legislative calendar is I'm sure this is probably not the priority for whichever party takes leadership. This wouldn't be like the top of the list of things that would get put through the. So yeah, I mean next year would probably be even optimistic. I don't know whether it gets bundled into like a larger kind of omnibus package or something like that. I think there's still a lot of time that they've worked through all the ins and outs there. So I wouldn't be holding my breath, for something like that to get passed anytime soon.
Fair. I want to talk energy with you for a sec because we talked about it a little bit earlier today. We're seeing Texas really showcase the use case for why Bitcoin miners are so instrumental in helping energy grids and infrastructures really expand and grow. We've also seen over the course of this year, other states taking drastic opposing positions, like the state of New York. We have truly the most obnoxious politician against Bitcoin, Elizabeth Warren, putting forward bill after bill trying to combat proof of work. I gave you a lot of things that we can start at. I'm curious though, where or what is most exciting out of this space? What is the thing that you care more about? And is it one of these negative aspects like attacks by the state or attacks by politicians, or is it sort of the positive showcases of Bitcoin that allow us to see like, hey, this works in the way Bitcoiners have been telling you this works?
Interesting. So I think we're trying to figure out what the equilibrium, or at least the steady state, maybe an equilibrium, the steady state for Bitcoin mining in the United States is going to look like. There was sort of this, massive kind of perturbation with the China exfil, and then everyone came pouring in at the same time. There was this run up in price, and there was, like all these new business models and people jumping into the market and getting financing, and so there was like a really kind of extreme set of circumstances that had kind of like launched what you might saw as like, the current incarnation of US Bitcoin mining. And I think we're seeing that kind of reach some sort of, it's got to come back down from that kind of crazy period. So I'm really interested in seeing like what shakes out of that as we enter into a period, there's not going to be a whole lot of liquidity out there in the general financial market. So borrowing and financing environment's going to be much more constrained. As we have some sort of crazy run up in the Bitcoin price that's unanticipated, you're going to be in this sort of somewhat kind of desultory kind of period. And so there it's like where, Bitcoin mining as a business and as these industrial scale operations intersecting with different energy grids, with different purchasing power agreements, different business models behind the meter, off grid, et cetera, are really going to have to kind of prove themselves. And I'm really interested to see like what comes out the other end of that, right? Like you get a sort of healthy winnowing out of kind of the poorly run operations, the operations that haven't taken into account their like local context, the regulatory environment, their kind of potential tail risks in different sort of pricing markets. So that's what I'm really interested in, just seeing like that as like it's rarely get to see like a novel industry kind of like get created relatively short period of time, especially an industry as unique as Bitcoin, which is in a lot of different places, sort of by definition, it's sort of geographically agnostic. And so I think you're going to learn a lot. I think it's like a natural experiment about what sorts of business models work and which ones don't, right? You can pencil it out on the paper, but like, you have to do the proof of work. You have to actually like set up the operations, run them well, and see how well you can keep that profitable over, even in a period where you can't necessarily get some, like debt financing. So that's what I'm really most interested in seeing, like, where is Bitcoin mining as an industry? How does it actually evolve in the United States in the next like 12 to 18 months? Because a lot of these other like subsidiary questions about the regulatory environment, how easy would it be to potentially capture that sort of thing, really fall down and like, where does Bitcoin mining shake out geographically in the United States? At what scale versus Texas, Georgia, Oklahoma? What are these different business models, and how well can they, sort of sustain themselves in kind of a quasi bear market over time? So that's what I'm most interested in looking at.
I'd love to spend some time talking about that, because like I am a very active investor. I probably shouldn't admit this openly, but I still do buy and sell stocks and shitcoin, not shitcoins, but stocks being the shitcoins. I've long felt, the mining boom that we saw was because of cheap, easy money, and we're starting to see sort of the falling out of people taking advantage of cheap money, and those kind of caught with their pants down are getting screwed over. What are I don't want you to give away all of your trade secrets, but like, what are current business models that you like, and where are you expecting changes to be made in that industry?
Oof. Well, it's a little bit. I'm not an active investor in Bitcoin miners as like a private equity, so I'm sure there's probably folks that would have like the cutting edge there. Honestly, I think one of the biggest discriminators is going to be how folks control their costs long term, because I guess it's like basic for any business, but like, what is it like actively, like how do they do that? And that's going to require some sophistication, not just on like the mining side, but on like the financing side, and then the interaction with different grids. And I think the folks that can get like behind the meter, like longer term arrangements are going to be like really well positioned. I think there's going to be a lot of pressure in certain jurisdictions for folks that are, taking off the grid directly. Like there's gonna be a lot of like, like those are gonna be like the front end of the political attack, are the folks that are just like competing for the same watt hour with like a residential customer, right? Even though we know that's like not really the way it works, but like that will be the more kind of politically kind of vulnerable sorts of operations, whereas the ones that can like credibly demonstrate, they're actively supporting grid balancing or load balancing or frequency control, or they're doing some of the methane the methane offtake, or they're helping bootstrap some of these kind of stranded renewables, et cetera. I think that's like an interesting, if like, as long as that economically makes sense, right? Because there's some of those things that like look good, but if those wind farms are themselves vulnerable because they have poor financing and they're really intermittent and they shut down, well, then your operation is shut down. So it's very complicated. And that's the thing, is like, it's extremely complicated business. It's probably one of the more complicated businesses out there. I don't think, like, I have no special insight. If I knew, I would have 100,000 ASICs running right now. I don't have that special insight, so I stay out of that. I stay out of that business. But I'm interested in, just from a policy perspective, about how it's going to play a potentially significant role in different parts of the energy market. And there are, as we know, like positive externalities and negative externalities, and it's important to like be conscious of both of those, and then to see how well the actual free market incentives combined with what local governments do, what state governments do, what the federal government does. Like, this is like a new industry, and so all these sort of things are being shaken out kind of as we go live.
I want to play a little bit of a what if scenario, and P, chime in here with what you think happens in this scenario as well. But we've already seen China ban Bitcoin like 8,572 times. And yet somehow the Bitcoin network continues to operate. Bitcoin made a new all-time high after that happened. And so my question to both of you is, let's say somehow Elizabeth Warren like wins her crazy battle and proof of work is outlawed in the United States of America. Does Bitcoin care? Does it stop? Like what happens to these miners that are under US jurisdiction? Like where do we go from there after Elizabeth Warren in this doomsday scenario wins out on her fight?
I mean, I'm happy to jump in here. I think Matt will be able to give a much more quantitative answer here. But I guess what I would say is we have seen an unprecedented amount of selling pressure already on the Bitcoin price, right? We had, the 3AC blow up, we had the Celsius blow up, we had all this stuff happening. And the fact that we didn't go even lower based on that is very bullish and compelling to me. So just from like an NGU focused perspective, there's that. But just as we saw, I mean, I think it would absolutely affect the price in the short term. But the thing about Bitcoin is that the actual price of it is not, to me, the most compelling thing about it. And so just as when China tried to ban mining most recently, and we saw this migration of hash power outside of China, I think the same thing would happen here. There are very compelling reasons to mine Bitcoin in places that are willing to support it. And I think that would just continue to happen. It would be a setback, yes, but I don't think there's no way that would be like the end of Bitcoin, you know? And I don't think that's actually going to happen. I don't think we're going to ban proof of work. I think the Ethereum switch to, POS is going to be such a disaster that there's going to be a lot of people that are like, oh my gosh, how could we possibly have foreseen this outcome? And then Bitcoiners are going to be like, are you fucking kidding me? And then that's what's going to happen. Matt, what do you think?
I mean, you can assume any scenario you want, right? It's like, I can imagine a scenario where solar flare wipes out the grid and it's like not good for Bitcoin, but it's like, is that relevant for anyone's decision making, right? So it's like there's no I think plausible scenario where like Elizabeth Warren herself, takes executive power and like bans Bitcoin, right? Like this is I don't know, like you construct an infinite number of these sorts of negative scenarios, right? So the question
Absolutely.
is where the probability distribution are they, and are they relevant to like like how much credence do you put in them versus like, and you got to think it's like symmetrically, right? Like for every negative downside scenario, is there equally likely upside scenario? What would be the political conditions? Because we're really making a political assessment here. We're not making like an economic assessment. We're not making an assessment about what like when the next block's going to hit. It's like entirely a political, judgment, right? And people have whatever they make the prediction markets, but I don't put much stock in anyone's ability to forecast kind of political evolution. So then it's like matter of just like what's the reasonable bad case scenario, what's the reasonable like best case scenario, and kind of where we're gonna more likely end up somewhere in the middle. I think like you're likely going to see, especially in the Biden administration, an increasing willingness to kind of push the limits of like the national security justification against Bitcoin and the climate kind of argument against Bitcoin. And like there's not like a unified front. There's people in lots of parts of the government that are neutral, negative, positive, and it's a complicated, messy kind of bureaucratic machine. And any particular instrument of power is like very much disconnected from every other instrument, and so you can get kind of somewhat disconnected, if not like downright kind of incoherent policymaking on different things. So to be like, I think what we should more likely expect is like downside scenario would be like tornado cash style sorts of OFAC things that just become much more aggressive on like Bitcoin miners. So like just like try to like incrementally boil the frog on Bitcoin miners. So like try to get them to sort of come into more of like a walled garden, so to speak, right? Because it's not necessarily hitting the application layer. It's hitting, and not hitting the protocol. They're trying to hit like the application layer and like the corporate layer, right? Like there's layers to Bitcoin beyond just like the social consensus layer, the Bitcoin layer. There's the political, economic, social layer of corporations, like state and local regulatory regimes and sort of national enforcement. And so, I think it's an interesting test case to see how far they think they can push, things like the OFAC power, right, which is a really unique power, right? It's technically, like the tornado cash justification came from the National Emergencies Act, and through like a separate international economic, it's like IEPA, I forget what the full acronym is, but like that basically allows them to sanction foreign property and entities associated with foreign property. And tornado cash, I think there's gonna be some litigation about exactly to what extent, the smart contracts can be considered like a person or a property or an entity. And yeah, so I think there's gonna be some interesting, like that would be where I'd be looking, would be like more in the like the technocratic wield the sanctions power, and then really use the kind of kind of scare compliance into companies, not necessarily require it, right? But basically, kind of leave the ambiguity open, and then, as we saw with the Ethereum stuff, like self censorship takes place, right? So it's not compelled. It is scaring a bunch of U.S. people that are, VCs or executives, and that, don't want to get in trouble, and will just like act on a precautionary principle, and will just like take action themselves, even if they may not be required to. That to me is the more downside scenario. Is like, it's like, they kind of do this, and then a bunch of, executive Bitcoin miners and the other folks at sort of the corporate layer, like they flinch, right? That I think is more like, that's the kind of game you're probably going to see play out, as opposed to this like, oh, the big hammer of the state's going to come down and a bunch of, jackbooted thugs are going to come steal your hardware wallet, right? It's like, it's not going to happen. So I think that's more, the boundaries of to what extent does something like that take place? What are the instruments of, eventually those sorts of things end up in courts. It's like very boring, right? It's like these sorts of things end up in lawsuits, and 2 years later, after lots of court cases, you find out that like maybe there's new case law, maybe there isn't. I don't know. I think you're overestimating how much of like there's gonna be some major crackdown, or even just like major legalization, as opposed to just sort of this random semi-drunken walk through kind of a novel regulatory landscape. And there'll be like hits to the left that everyone will like panic and say this is like, the nation states attacking Bitcoin, versus like the other side, people will be like, oh, look, like we've achieved, the Trojan horse effect has won, right? Look, we've got Gillibrand like Lummis. I think it's going to be in the middle. You're going to sort of be bounced back and forth. I think net, like my expectation is the trend towards, gradual adoption, institutionalization, and, regularization of the legal and policy environment. But that's not to say that there aren't going to be, different fights along the way that could be considered very severe. So yeah, I don't know. That's where I'm kind of at. And yeah, it's why BPI exists, right? It's sort of the whole premise of BPI is that like, there's going to be those moments where you have to like engage, and there's going to be like broader questions that you need to inform. I mean, one kind of, example here, I can't get the details, but like, there was like discussions in like the senior parts of like the technical apparatus of the White House, like looking at science and technology stuff. And they're like a bunch of scientists, they're a bunch of bureaucrats, right? And they're told to look at this thing, right? Bitcoin. And like, what are its energy kind of implications? And, like they don't necessarily have a prejudice against Bitcoin. They're just like Googling, right? And then they want to know, is this thing true? Or is this not true? Right? And it's like a factual, somewhat empirical matter about what exactly is happening with Bitcoin mining and what is likely to happen in the future. And you make some assumptions, you make some kind of reasoned extrapolations, and people can sort of fairly differ about which assumptions you build into which model. And, and that's like what scientists do, right? They develop models for different phenomenon, and then they put in different assumptions, and they tease out kind of what's the kind of parameter space of possibilities. And that's kind of what they're doing. And it's like, I don't know, like from my reading is that there was relatively good faith, honest kind of scientists trying to look at a question and trying to understand all aspects of the question. And, wherever they end up, right? I don't know, but like, it wasn't like, we're coming for you, right? Kind of thing. It was, this is an open question. We need to capture data. We need to look at all the arguments, and potential models. And also from a public policy perspective, this is the thing, right? There is like the default towards like risk aversion, right? Like in general, right? Any particular bureaucrat, like their job is mostly measured on like not messing something up and not having blame for something bad happen on their watch or like be traced to their decision. So there's like a general kind of, cautiousness on anything new that's going to lead them to potentially more like status quo bias, right? Like, okay, like what we have, like, let's not like introduce something brand new that could like create all sorts of second and third order consequences, and then we get blamed for it. So there's just a general conservatism when it comes to crafting regulation about something new. And it's sort of, sometimes hard to untangle, okay, how much of this is stifling innovation, and you're just like, you're in the pocket of big X, where big X is like the incumbent power, versus, kind of prudent, precautionary, kind of conservatism, right? To make sure that you're not making big sweeping changes before you've thought through the second and third order consequences. So I don't know. That's kind of mealy mouthed and in the middle, not giving you the extreme answer, but that's, I think, generally how reality shakes out.
I think you make a great point in that by focusing or asking questions that are kind of very unrealistic, I think that there is a danger of not taking into consideration the more subtle, as you said, kind of wandering walk effects that a lot of these policies have. This recent tornado cache situation, as you point out, is going to have a significant chilling effect on the amount of risk that anyone is willing to take. So even if this is found to, or basically over years from now, if it's found that this was not reasonable and should not have happened, it will have had a very significant effect on what people are willing to do and what they view as acceptable risk going forward. And that's the real danger here. And that's kind of, I think, what you're speaking to and fighting against with BPI.
Yeah, I mean, it's about keeping the Overton window wide enough for just generally accepted principles of expression that we apply in other domains, right? And just making sure that we're not applying anything inconsistent, right? And there's like novel questions about how you interpret like a smart contract, et cetera, under law that was written before such a thing even existed. And like anything, right? Like sometimes you could ascribe malice to policy. Sometimes you can ascribe just like there's a blunt instrument and it's not necessarily sharpened to carve against these novel distinctions that the law wasn't written to take into account. And it's unfortunate because you would hope that like policy would be like up to date on all the latest things that are happening and would like finely tune every regulatory intervention to like maximize benefit and minimize harm. But like very rarely is that the case. And you can have these consequences of kind of chilling effects. But there's, it's a balance of interests, right? So like, I'm not a maximalist when it comes to like moral principles. I'm like more like a pragmatist. And it's like, you have to balance every case kind of on its merits, right? Like, for example, if there was like a mixing service that was like 100% all for child pornographers, right? If that was the case and everyone agreed that that was 100% child pornographers, it'd be like, great. Yeah. Like end it, right? Whatever you got to do, end it, right? But like, whereas if it's like 0.0001% child pornography, like, well, there's like that's like generally speaking, like in any society, you're gonna have like deviance that, and you don't like crush civil liberties and freedom of expression and transactional privacy because of like the tiny minority. But like that's like a philosophical problem of like, where's the line that everyone would draw in terms of the trade-offs, right? Like between that like 0.001% and 99.9%, right? So that is it's like a moral question, right? No one's not really like win like an empirical argument there, right? It's just people have different sort of prior sets of commitments to different political value systems, right? And what the trade-offs between, say, national security and law enforcement are with respect to individual liberties and privacy. Like these things are inherently balanced in any society, and you want to tip more towards the privacy and the sort of civil liberties angle, and it's just a matter of how you adjudicate that balance and push back if you think that the balance has been tipped too far in one direction.
Shifting topics slightly, I'm curious if you have any, or significantly, I'm very curious if you have thoughts on this this story that was published in the Register about the U.S. banning the export of the technology used in 3 nanometer chip production.
Yeah, I mean, this is the front lines of kind of the intensifying state competition between the United States and China along all sorts of dimensions. And so economic war has been in sort of a hot mode for a while now. And chips are the centerpiece of that conflict. We have undertaken a wide range of efforts to basically try to restrict China's ability to develop themselves domestically, and they're sort of made in 2025 kind of priority industries, of which semiconductors is one of their top priorities. In 2020, China basically put building a kind of a self-contained semi-autarkic semiconductor fabrication capability, like on par with how the state prioritized nuclear weapons development in the early history of the party. And so like they put this on the top of the list of like, we must like become self-sufficient in chips, including advanced logic chips, which right now are sort of 7 nanometers below, really 5 nanometers below. And the United States has really engaged in like a multilateral effort using things like the Wassenaar kind of conventions or agreements, can't remember what it's called, basically to like get like all of our multilateral partners to agree not to export certain technologies to China. And in particular, the advanced lithography equipment that's made by really two companies. There's a Dutch company, ASML, and a Japanese company, Nikon, that makes these advanced lithography machines that you need in order to produce chips. And so China has been sort of stuck at about 10 nanometers. They recently were able to kind of demonstrate an ability to produce 7 nanometers with kind of the old version of those lithography equipment called DUV. They've been restricted from accessing EUV. But basically, we've had an agreement with the Dutch to like don't export the EUV kind of machines to China, and so China's basically been kind of struggling to kind of further their progress, and they're kind of frustrated. In fact, so frustrated that President Xi just announced like a corruption investigation into 3 of the most senior officials that were in charge, basically, of this chip indigenization effort. It's like some big names basically got the tap on the shoulder and were taking stage left because they poured I think $78 billion just in the past few years on sort of domestic chip investment. And this is like a major thing, right? So we're trying to both stop China's ability to produce these advanced chips like below 7 nanometers, really, at the same time that we're trying to reduce our vulnerability to Taiwan and TSMC, which right now produces about 92% of all the advanced logic chips in the world, and which are critical for our advanced consumer electronics, like iPhones, etc., Tesla, AI, self-driving vehicles, as well as military applications, right? Like the Javelin missiles, like we can't make, or some of our precision-guided munitions and other advanced unmanned and manned systems rely on these chips. So we're trying to reshore some of that. It's going to take a while. I mean, we just passed the CHIPS Act to pour like $50 billion into domestic industry. That's probably like a tenth of what's going to be needed if we're going to be serious about that. So yeah, it is like the chips are the front line, but they're just sort of one manifestation of kind of a full front like economic, trade, cyber, diplomatic, asymmetric, subthreshold conflict between the U.S. and China. That everyone hopes sort of stays that way and doesn't, spill into an outright state-on-state armed conflict, like in the South China Sea or in the Taiwan Strait. But that seems to be the direction we're heading.
Yeah, I was commenting earlier. It's super interesting to me that, publicly we recently said that like we support China and the one China policy, and we don't support Taiwan and being a separate entity. And then simultaneously we're doing this kind of stuff. I think it's
this is like the whole Taiwan thing is a whole conversation. We have, the Taiwan Relations Act. We have the 3 agreements, the 6 communiques that sort of basically say we're intentionally speaking out of both sides of our mouth as part of a quote unquote policy of strategic ambiguity to basically give the Taiwanese enough assurances that, they're somewhat protected while not triggering the Chinese in violation of our one China policy, and then forcing them to challenge that with an via a kinetic operation. So that's kind of like our policy is sort of inherently incoherent because that's how we have historically balanced these irreconcilable strategic conflicts centered on the Taiwan question. And so there is by definition no coherence to that unless we're willing to fight a war to make that question clear, right? And Biden has come out like 3 times and he said in verbal comments that we would defend Taiwan, and then everyone has to basically say, well, that doesn't change our policy, and everyone's like, well, kind of does. And so we have kind of there's sort of this shift in the policy world. Everything goes like in these wonky technocratic terms of like We need to move from strategic ambiguity to, quote, strategic clarity, where strategic clarity is where we're sort of unambiguous about our commitment to Taiwanese democracy and our willingness to defend it with force if it's threatened by the Chinese. And so that is a question that's sort of everyone's sort of creeping up to, but no one's quite ready to make that official move. And everything in statecraft is about kind of keeping your options open. I don't think there's going to be a radical change in policy now, but I think everyone's recognizing and waking up to the fact that things are not heading in a positive direction with respect to China. That it's much more likely to get worse across every aspect of our relationship than better in the next few years. It's just a question of how worse, right? Is it just more trade wars, more economic tit for tat, more the sort of typical games of influence operations, et cetera, or does this tip into actual armed conflict? And like the warnings from the intelligence community and everyone is that it's more likely heading towards an armed conflict. But
is that really the case? I didn't realize that.
Yeah. So the various intelligence officials have come out in the past few months and just basically said, the window is closing. It was like 2027, 2025, and now it's next 18 months is when it's like the window for some sort of Taiwan action. Now I think like the aperture of what that would mean is pretty wide, right? Like people think Taiwan is like that means it's a full scale invasion. It means like it's all out war. That's one scenario. But there's other options, right? That China could use to and then you kind of saw with the Pelosi visit of like laying out kind of their SOP for how such a conflict might unfold is their game is to not create kind of a precipitating event that brings the United States into the conflict before they've potentially had a window where they can block off the trade around Taiwan, under the guise of some provocation or just because and then maybe they go and they snip some of those 14 fiber optic internet cables that connect Taiwan to the outside world. Maybe there's some cyber operations to hit their satellite communications capabilities. Maybe there's some deniable domestic sabotage on their power grid and local infrastructure. Maybe there's some, targeted political assassinations, and all these things are sort of, intended to remain below the threshold by which, President Biden, potentially like in an election year where he may or may not be a lame duck, is going to have to decide: do I, put the carrier battle groups into harm's way, and actually fire the first quote unquote shot to stop what would otherwise look like a kind of Crimea scenario. I don't know. That's like one. There's other ones where it's not as aggressive, where he just goes after some of the outlying islands as like a show, basically like a propaganda victory. He goes after the Dongyan or the Pratas or one of those other kind of islands close to the mainland, and dares the Taiwanese to sort of fight to take back an island has like maybe a handful of people on it or a few hundred people. So that is, if I'm looking ahead to like the next 2 years of like geopolitical risk manifesting as like acute global risk for everything, that's probably the top of the list. So a lot of Western multinationals are now recalibrating their position with respect to China. And it depends on what business they're in, but everyone now has to consider scenarios where tensions are getting worse, and then have to consider these kind of tail risks that are now not necessarily off the table for their business, which they built under a sort of a warm canopy of globalization, right? Like a lot of these companies went into China and Russia, all around the world, in sort of Pax Americana, global hegemony, and like the Washington Consensus, like capitalism is one, and we're going to convert China and Russia and all these other states to the global capitalist order, and that's clearly not worked out. but now they have these business entanglements there, and they're trying to figure out, okay, how can we protect ourselves? What do we do in a world that's deglobalizing potentially rapidly?
So I know that you laid out one such possible scenario, and we could literally spend the rest of our time here playing the what if game and come up with so many possible scenarios that will never come to light. But I'm more curious on where your expectations are of the net effect and how US citizens would feel any sort of China Taiwan conflict. Like, where is it going to be felt in our lives day to day? Or will it kind of just be a news story and we in America move on from it?
Uh, there's very few scenarios where I think anyone moves on from a U.S.-China conflict. The question is whether people, are still walking at the end of it. Let's put that scenario on the side. So we don't get into the sort of the worst case scenarios. But assuming it's basically like in my view, like the more plausible scenario. Again, it's like plausible. It's hard to put like probabilities to these things because they're inherently judgments of like very few people, and oftentimes wars are precipitated by misjudgment and accident and miscalculation. And so even if you're trying to reason through like the game theory tree of what the optimal decision would be, even if you had that game theory tree fully mapped out, like people make bad decisions. They didn't eat breakfast and whatever, right? Like weird things happen, mistakes are made, miscalculations, misjudgments, etc. So it's sort of hopeless to sort of like compute the probability tree, even if you could. So that like caveat aside, like one, I think, I and this is just me being kind of maybe cynical, but I just don't see the United States unless the Chinese are really dumb and like kill thousands of our sailors like in an unprovoked first strike, which could be what they do. Like they could hit our bases in Guam and Japan, maybe some of our other assets in the region as like a first strike to like wipe out our ability to then counter their military operations, and then try to declare a fait accompli and hope that we just sort of eat the losses. That would be pretty hard to eat. I don't see the United States. I think if there's one thing that could galvanize, right, the United States public in our kind of current political divisive environment would be like a first strike that killed like 10,000 sailors. Like people would be like, no, like that's not cool. Like we're not going to just take that lying down. I think like that would be like the Pearl Harbor. Okay, yeah, like this is like a kind of a rally around the flag kind of scenario potentially. Even that may or may not be enough, right? But I think if there was going to be something like that, would be the one strategic mistake. If they didn't want us to get into conflict, would be to do that sort of first strike and then try to knock us out. So they're probably not going to do that, which means our assets will still be there, and it's a question of them trying to undermine the motivation and rationale for getting us in the fight. And in the absence of something precipitating like that, right? Like thousands of our men and women, killed in like a bolt from the blue first strike. It's gonna be hard to motivate, like a total like war, like mobilization, right? Like oh hey everyone, we're gonna go to war and we're gonna like get serious because the lights and the internet went off in Taiwan and there's reports of some bad things happening. And we're going to, mobilize our entire society for war with China. I'm just not sure that the political capital would be there, especially in like an election year. And yeah, so like the cynical play to me is that we would basically run like the Russia playbook, but like at scale. And we would basically say like we need to fight like a total economic war with China. And we would try to rally kind of the global community, so to speak, of sort of our Western allies to, sanction China. And that's going to be really difficult because, if the Russia, cascading consequences to the energy markets, et cetera, were large after their invasion, China's would be 10, 20 times larger, right? We're talking global depression. So yeah, like even in like the benign scenario where we don't actually fight China and we're not in like a war that escalates and risks, like big bad things happening, you're still talking global depression, breakdown, supply chains. And when you look at like what we rely on from China, I mean, like pharmaceuticals, right? Like doctors are not able to get like basic medicines and basic supplies, critical inputs for a lot of our manufacturing processes. Like the global world is built with China at the heart of it, right? Like Russia energy is important, and there's a reason why we didn't really sanction Russia energy, right? We haven't really put a cap on oil. We haven't really sanctioned Russian oil. We're like doing these like little things on the margin to like make them feel some pain. Russia's still running a massive current account surplus. And it's like, I see no, and they actively did the invasion, right? Like they're actively murdering lots of people, right? So like, I see that as basically evidence that we would basically do the same for China, and probably with even less effect, because China is much more integrated into the global trade and production system than Russia is. Like, you can marginally substitute like raw commodities, like price just gets higher, right? Like, if you don't have enough oil, there's still oil around, you can substitute for that oil, but it's just more expensive, and so everything gets more expensive. But you can't actively substitute for like manufacturing and factories that just don't exist anywhere else, right? Or don't exist in scale. And where we've optimized global supply chains for like the one part that comes out of that one Shenzhen factory. Well, if that parts doesn't come out of the Shenzhen factory, well, then like the product doesn't get made, right? Like we saw some of that during COVID, right? Just like supply chain snarls and everything, just because of the backlogs and the COVID shuts down. So it would be that on steroids, and that like indefinitely. And so it would be a complete mess. Like it would be really bad for the global economy. So yeah, that is a bad scenario where, like, no one's going to be immune from that. And that's where the money printer has to go majorly burr.
You're muted, Kay.
Yeah, I knew it. I was like, fuck.
I stunned you into silence. Just the
That's right.
depressing, China conflict scenario. Yeah.
I mean, look, I'm still not over the fact that you said, like, are we going to be able to walk at the end of that conflict? So I'm not even going to try to unpack the doomsday scenario that you alluded to there, Matt. I don't want to. I want to stay on China, but if there's anything else on the China-Taiwan stuff, feel free to chime in. But I want to actually highlight and talk with you now about an article that you actually tweeted out from Michael Pettis regarding Russia accepting the yuan, rupee, and lira for their energy exports. Look, I have long said on this show that those meetings between Xi Jinping, Vladimir Putin, before the invasion of Ukraine were not some coincidence. Those two have also been colluding and meeting with the president of Iran to better understand how they survived under sanctions. Lo and behold, now Russia is under U.S. sanctions. And should China take any action towards Taiwan, I think we all, I won't speak for you guys. My expectation is they would immediately be put under some sort of sanctions. And now all of a sudden you have this almost three-headed monster that the U.S. has said, we don't like you guys. We don't like what you do. But there's enough energy, money, and production between those three countries alone to just continue to operate as they see fit. I guess my first question is there a point in the near future where U.S. sanctions fail to be as effective as they have been historically?
It really depends on if China decides to just pull the plug on their development model for the past 20 years. I mean, like, their credit fueled growth has been a function of their integration into the global euro-dollar market, right? So they take dollars as what they earn in trade surplus, and they recycle those into, on the margin, U.S. Treasury securities, but also dollar-denominated lending throughout the Belt and Road Initiative, et cetera. So they've like developed their economy, basically trying to reallocate that surplus into domestic investment and overseas kind of asset accumulation. It's been working for them up to a point. They sort of reached a point of kind of debt saturation because they didn't really want to liberalize their domestic capital market. Everyone had to move into real estate. So about $90 trillion of domestic real estate as like a massive bubble. It's a different problem than our housing bubble was. And so basically I'll bracket off that China has major economic problems that they're going to have to deal with. They can take a lot of pain because it's a matter of distributing those losses internally to the society. And this one thing totalitarian systems are good at is making people feel pain. And it doesn't lead to economic growth or economic productivity improvements. But, the first order objective of the party is political stability and their continued rule. That's what they'll that's what they'll optimize for. And in an environment where they have, less access to dollar liquidity, credit deleveraging, banking crises, et cetera. But I fundamentally don't think it's going to undermine regime stability. I mean, they have gulags and lots of people that they can apply to enforce those things, as we saw with COVID zero policies. So that is one variable is China's decision about how much they want to continue with their economic model, which relies on this engagement and really kind of interdependency with global Eurodollar system. But like stepping back, right, what we're seeing is like the result of like fundamental conflicts between a system that was built on the marginal pricer of energy, OPEC plus Russia, or OPEC plus, the marginal pricer of like finished goods, right, which has been China, like they make the stuff, and the marginal pricer of money, which is credit, which is basically the dollar G7 system. And so you've had this system when those were in frenemy mode, energy markets, finished production, and dollar system all kind of working together as a global integrated system, right? Where there was Ricardian trade, there was, optimization of, okay, like you've got the energy, I've got the consumer demand, and you've got the surplus savings. We're going to start moving those things around and have a nice global system that works, decently well. When geopolitics comes in and breaks those frenemy relationships, like there's no like easy new equilibrium that gets established. It just starts disintegrating in weird and potentially just like nonlinear ways. So like the Russia piece is like, all right, well, we just knock off some portion of the energy supply to the global system, but we got to find substitutes for that. Luckily, we have some substitutes in the form of like liquid natural gas, and maybe we can juice a little bit more out of OPEC, and maybe we don't sanction Russia as hard, and so we can kind of like keep the system basically going while like penalizing some people on the margin and making sure that those Russian oligarchs don't have their yachts, etc. But fundamentally, the system doesn't change. German industry can just like wait it out for like a year or two and then turn the taps back on. So there's one scenario which like everyone's just sort of like hoping the system can come back into place because like everything was built on it, and so they're just like waiting for things to sort of slowly evolve, and then eventually everyone just gets bored and then says, yes, like we want jobs and basic quality of life, and that means we have to turn those pipes back on, and then that's so be it. I don't know whether the system completely breaks or whether we're just sort of in this like really uncomfortable period where there's so much strain between those different legs of the stool that it just is really uncomfortable for a while, and then eventually people realize that it has to be reconstituted basically in the same fashion. And that would be the bull case for like the global dollar system for like the next 10, 15 years until our debts take care of it like at a more fundamental level. But the more alternative case is what you pointed to with Pettis of like, okay, is this Eurasian axis of authoritarians really trying to posture to challenge the global order premised on U.S. Military and economic hegemony, and that the center of that is the U.S. Treasury security recycled into the U.S. dollar surplus recycled into U.S. Treasury securities, basically, and Treasury securities becoming the funding collateral for the $700 trillion of derivatives around the world. That's a big question. Like 70-75% of all global cross-border trade or cross-border dollar like flows are finance capital. It's not trade. It's not like remittances, right? And that sort of stuff. And so like I see these things, these stories about people, certain countries, de-dollarizing certain aspects of their trade, and argument or announcements that they might be shifting some portion of their reserve savings away from the dollar into a basket of other currencies as like marginal hedging that like is indicative of more political signaling than any necessarily like an economic phase shift potentially. Just because structurally, like changes to the global monetary system really only happen as a result of fundamental changes to the global geopolitical balance of power, right? It's just like the predominant monetary order is always downstream of the dominant political and geopolitical power order. And so you need to have that power arrangement fundamentally change before you can really have dramatic change in the monetary order. It's just like whoever has the most power kind of writes the rules, and they can enforce those rules and can basically dictate terms to the majority of actors in that system. That's sort of what power is. And so if you have that power, then that power is going to be used to enforce the trade and sort of finance capital arrangements that we currently have. So yeah, I see those as just indicatives of like certain parts of the system want to protest, right? Want to like make an announcement, but like really you'd have to see like geopolitical arrangements shift more dramatically. There are people like that could act as tipping power. So like in a multipolar system, it doesn't take much though to have that geopolitical order shift, because you only need a few kind of key balancing powers to sort of pick a side, basically. And in my view, those balancing powers are basically kind of the Eurasian periphery, and mostly like Middle East, like oil producing states and India principally, maybe some parts of South Asia. But it's really where they go, and they're the ones that you see now kind of hedging in the middle, right? Like Saudi Arabia, like doing lots of arms deals with the United States. Like Lockheed Martin is building missiles there. Biden just went there. They're trying to keep some semblance of relationship there. MBS just poured billions of dollars back into U.S. equity markets from his private piggy bank, the PIF. So they want to still stay on the good side of the dollar system, but you also see President Xi is going to visit Riyadh and get the whole pageantry, much more kind of a warm welcome than Biden got when he visited Riyadh. And there's probably going to be a lot of announcements coming out of that meeting about close partnership and trade relationships and kind of like warm diplomatic relationships between Saudi Arabia and China. The sale of some oil in yuan, joint investment projects, etc. And I think that to me just shows Saudi Arabia is trying to put itself in the middle of that relationship and extract like what you would do. You would want to play both sides against each other, right? Like now that gives you power. Now you can start to trade one off against the other. Same thing with India, right? India gets the majority of their military supplies from Russia, and they get to basically import cheap oil, refine it, and export it and capture the spread. At the same time that they still want to be in the Quad with the United States to try to counter China, which they have major border conflicts with. So everyone is basically going to be positioning themselves, in this multipolar system to try to play East and West against each other. And so you could imagine that over time, the sort of aggregation of hedging behavior by all those tipping powers leads to gradual pressure to de-dollarize, specifically de-dollarizing their reserve assets, so their holdings of treasury securities and Western equities, et cetera. And that's not like a binary like flip, right? It's going to be a gradual devolution of kind of a system at a certain apotheosis of U.S. power that sort of gradually gets drawn down as the system becomes more balanced across different sort of centers of power. So yeah, I don't think it's going to be this grand collapse. Unless there is a war, right? Like the one thing that can change that is if you fight and lose a war. Like that's the one thing that will, like, without fail in history is like it's a new system, is if you fight and lose a war, especially if you're like the top dog and then you fight a challenger state and you lose to the challenger state, then you're in an entirely new regime and it's a different ball game.
Wait, hang on. I need to
ahead.
unpack that with you, Matt, because I'm gonna list a few wars that I do not think the U.S. won. I'm gonna start with Afghanistan, and then I'll go to Iraq. I'll go down to Vietnam. I'd argue we didn't even win the Korean War. So
Yeah, but the narrative we pushed is that we definitely won that war.
I understand the narrative that we push forward. However,
those wars, I should say,
those are all proxy wars, and that's like, so as an imperial power, right? Your job isn't to really try to win those wars. Your job, I mean, it would be nice, like from the empire's perspective, to win those wars, but the job of those conflicts was to try to impose your will on the periphery, right? So like you're fighting in the periphery, right? You're fighting over the periphery. You're trying to constantly, basically, reestablish to challenger states that they shouldn't challenge you, right? And I think Afghanistan was an interesting, like, potential tipping point in the perception among challenger states that the United States was vulnerable. You could argue that, like, partly of our indignified withdrawal from Afghanistan, with people falling out of C-17s, was probably something that, like, President Xi brought up. President Putin brought up with Xi, in the lead up to the Olympics, is like they're a wounded animal, right? Like they're weak. Like this is the moment to strike, right? And that's the whole game of power perception, right? Is the balance of interest in your favor or not? But really, those are not decisive conflicts, right? Those are proxy wars that just sort of drain your treasury, undermine morale, weaken your military capacity, etc. Like a decisive conflict is like peer level conflict.
Yeah, for sure.
Like the United States, like Navy going up against the PLAN, like in the South China Sea, and seeing, okay, like, do those hypersonics actively hit our subs? Do our subs take out their surface ships? Do their space weapons hurt our satellites? Does our cyber weapons take down their domestic kind of comms? Like that's where all these instruments of national power that we spend hundreds of billions of dollars on, right? Like we're just sort of waiting. They're just waiting there, right? And it's like, if those work and beat the challenger state in an all-out war, then then you maybe get a new lease on life, right? You've now suppressed the challenger has now lost, has to go lick his wounds for another decade or two, right? Or the winner is so weakened by the fight that everything basically falls into like a Dark Ages. So yeah, I mean that's again, that's like, those are decisive conflicts. So like history has usually showed us is what's required to precipitate a massive change in the monetary order, right? Without that, you're looking at a much more slow, a slow process of balancing, a balancer sort of tipping powers, marginally hedging over time, and like the dominance of a particular monetary arrangement gradually following. And then maybe there's a trend line there that's like, all right, it's now weak enough that doesn't take much. It takes like a natural disaster. It takes another financial crisis. It takes something less than a major power war to sort of everyone agree that system's not working. We're breaking that system. We're now just going to just flip to a neutral reserve asset system, like a commodity Bancor, like a gold, like a Bitcoin or something like that. And everyone just agrees, that there needs to be like a fundamentally new monetary regime. But that's going to take, like, we're not there now, but you can see the seeds being planted and potential kind of instability that could play out. But you never know. Like, it's like boiling water to like 99 degrees doesn't look any different, right? And then you get to 100 degrees and it's like very different, right? Because you get the phase transition.
I love. Would that be a metaphor, an analogy? I love that image, at least.
Yeah, I mean, these are not I'm like a total physics nerd. Like, these are like nonlinear dynamic coupled systems.
Yeah, you get that phase change.
Right? And so it's like you can see these things that just like, something's happening there, but like you can't predict how it's going to evolve, and you don't know if it's going to like cycle with like some degree of regularity. And then all of a sudden, like you see those like graphs of like the chaotic system. It's like it's going through some sort of attractor, and then all of a sudden it goes, poof, it just flies out. Yeah. Right? It just happens, right? There's no way to like predict when that would have happened, but like in any sort of chaotic dynamical system like that, it can just break.
Well said. Well said.
So, wait,
are you going to keep going down this route, Q?
I'm going down this rabbit hole more because the way I understood,
get out of the way.
Well, I want to unpack, because the way I am digesting, Matt, what you were saying is we have one of two scenarios from the Bitcoin lens. How do we get rid of the dollar? And it sounds to me like we either go into global war and the U.S. has to lose its place as the global reserve currency, or it's the slow, long, drawn out process where eventually everyone has left the dollar except for us, and then we're just left holding the bag. Did I understand that essentially what you are saying is you are on China's side for World War III?
Well, it's interesting when you say like the dollar, because I think the dollar could survive like lots of weird things. Because the dollar is just a unit of account, right? It's just like a symbol you put next to a certain balance that people treat as like a money that they're willing to exchange goods and services for. What's actually undergirds that system as a unit of account is basically a system of collateral, right? So the dollar is really built on the US Treasury security as the collateral for the global dollar system. So like all those like balances that have dollars next to them, right, are really built on, in the current permutation of the euro dollar system, like collateral, like treasury securities that have been pledged that are now basically what is being held by different counterparties in exchange for those dollar liabilities. And when people are, in a mode of like trusting and, general optimism, they're willing to lend and relend their collateral and take on, extensive counterparty relationships, this sort of chain of rehypothecation of those underlying securities, and generate a lot. Basically, it's like fractional reserve without any reserve, right? Just like it's generate, an indefinitely large amount of dollar-based liabilities in the offshore system that only have a par value as a dollar to the extent that all those counterparties eventually trace back to a commercial bank onshore in the United States that has access to bank reserves from the Fed. And so that's what elasticity in the dollar system kind of means, is the chain of counterparties in the offshore system that is basically the length of which is basically a function of how much trust there is in how much collateral people have to post to make those dollar-based claims. So I say all that to say that like the dollar system is far away from like what the U.S. authorities control, right? So people think of the dollar as like this instrument of U.S. national power. But like for decades, the dollar system has just grown up organically, completely outside the sphere of control of the Fed or anyone else in the Treasury Department. In fact, you can almost see what's happening now, really since March 2020, something, but maybe back to 2008, but like they've been trying to get control over this like completely independent, non-sovereign dollar system, right? So like when people say the death of the dollar, it's like, well, like the world has just decided to denominate like liquid liabilities in dollars that have like nothing to do with like the Fed, right? In the sense that like they're not liabilities of the Fed or liabilities of the commercial bank of the Fed. They're just fictitious entries in an offshore balance sheet that, for matters of convenience, people decide this is like a Schelling point for us. And so I think you can have the dollar system as like some version of the Eurodollar that has a dollar claim attached to it continue to survive, even if the underlying asset for that system gets completely destroyed, like the Treasury security. So when I say like the stability of the global dollar system, it's really the stability of the global dollar treasury system. Because the dollar has been around for, I don't know, since the first Bank of the United States, right? Like we just decided that all currency in the United States was going to be called dollars. But before we had the Fed, we had different state banks and or different banks that basically issued their own notes, and they often traded at a discount. So there was like a JP Morgan dollar, there was the Bank of San Francisco dollar, whatever. And so there were different banking dollars that had to trade at some discount to each other until we had the Fed, and then there was like, parity in the onshore dollar system. Now we have that globally. Now we have, Bank of Singapore. Now we have, random bank in the Middle East, in Dubai, that's issuing dollar-based kind of liabilities. We call it a shadow banking system. And that's what leads to these massive financial crises, is that shadow banking system massively expands liabilities and then doesn't actually have the underlying reserves or collateral to make the money good. And then you get bank runs and you get massive waves of default. The Fed has been trying to, and then the Fed has been in a position to basically try to backstop that global dollar system. That's our acute vulnerability right now, is like we have an obligation to keep those offshore claims apparently money good. And that means opening up things like swap lines with foreign central banks to flood dollars, basically, route them through the foreign central banks to their commercial banks, and then from the commercial banks in that offshore country to their other counterparties. It's like pushing, like drugs through the system and hoping it gets to, the cells that need it. And they're basically trying to control this really fundamentally uncontrollable global Eurodollar system, which is what that's the tail that wags the dog, not like the Fed funds rate FOMC meetings. Like those are completely irrelevant. It is really like, what is the shadow bank Eurodollar system doing? and what is the sort of web of invented dollar liabilities, and how stable are those claims with respect to each other? And so that's the system. And so that system is very vulnerable, very, very unstable. That system, has to be kind of reformed in some way. The incumbent powers are trying to reform it in a certain direction to try to keep the structures of that system intact, while they kind of, somewhat like euthanize it, right? Like you could almost, it gets really technical, but it's basically a combination of like global CBDC and central clearing for the treasury market, and basically, forcing everyone to hold treasuries in a regulated way so they can never sell them, and create kind of what we saw in March 2020 when, the Eurodollar system had a heart attack and the treasury market completely froze. And that's basically the ball game, right? Like we're trying to keep control of this somewhat almost fundamentally uncontrollable system. And that almost puts us in like a very awkward position, because like we had to effectively give China in March 2020 dollar liquidity, allow them to, safely and in a non-market way exchange their treasury securities for dollars to meet their liability requirements. Like, would we do that in a future Taiwan war? I don't know, but like, you get these situations where like to manage that dollar system has these sort of inherent conflicts with our geopolitical obligations or geopolitical interests potentially. And that's where, in my view, right, people sometimes, I don't know, like what's the national version of personification? Like they personify the nation's interests with like the currency, right? They think, oh, like the dollar is like the flag of the team that I fight for. And it's just, I don't know. It's like, I don't know. I think like a category error, right? Like it's just a medium of exchange, a unit of account that like global banks and shadow banks and just random institutions and entities around the world have chosen to use as a unit of account. It's almost irrelevant what that is. You could name it blah, 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 right? But it's what really matters is where do people hold their reserve asset savings? Where do surplus savings in the world go? Because the unit of account is just a means for trade, right? You just need to say, all right, if I'm going to trade with you and you're going to trade with someone else, it's probably better for trade if we all agree to trade in the same unit of account. Just makes transaction costs much more lower. That's why the dollar has a really strong network effect. It's because you're in a social network that everyone else is already in. It's just easier to denominate all of your mutual claims in the same unit. Use a dollar, sure. But that's sort of entirely separate from the reasons why you would hold a treasury security or other kind of U.S. quote unquote safe assets as collateral or as like where you store your savings, right? Because there you're making not like a medium of account unit of medium of exchange unit of account decision. You're making like a long-term store value decision. Like, is this an asset that I believe is going to fundamentally hold value for me? Is it going to hold that value in a way that I can actively access under all sorts of conditions, including conditions maybe where like, you know, the political authorities in the United States, you know, may not be too kind to me. And so like if you're like, like an autocrat in a developing market, like you hold a lot of your reserve savings in, you know, the United States. Well, you basically, you know, that's a form of leverage the United States has over you because they can now just restrict your access to your national savings. And so that's, I think, like the basic idea behind like a Bretton Woods 3, which I don't know, I'm kind of in the middle on, but like the basic premise is a marginal shift away from dollar-based reserve assets, principally treasury securities, for like outside money, you know, gold, commodities, Bitcoin is like a synthetic emerging version of that once its volatility converges a little bit more. But that's the basic idea. So yeah, to really answer these, this is me talking for like, I don't know how long, but like to answer these big fundamental questions about the global monetary arrangement, the kind of geopolitical order, you have to like, and that's just skimming the surface, right? There's all these sort of technical questions of the plumbing of the current system, how it's currently designed, how it kind of got to that current state, and then what are the conditions in which that system would evolve in different directions, given its sort of present fragility, but also its present strengths. And that's like, oof, if I knew the real answer to that question, I would have a, you know, I'd be worth a lot of money right now. But I'm making certain just sort of best guesses.
Well, once you have the answer to that, you and I are making a quick little trip down to Vegas, and you're going to tell me what numbers to bet on the roulette table too.
I just came back from Vegas. Yeah.
Oh shit! How'd you do?
I didn't lose. I'll just say that.
Oh shit! You won dozens of dollars.
I got free drinks for like a few hours.
Holy shit!
I ended up just really netting out zero. Yeah. No.
Nice. You mean what? So to explain,
Hey, that's a win. That is
all the
win.
money you lost canceled out with how much you drank. You must be a pretty big drinker.
Yeah, it was a good time. There was a big cybersecurity conferences there, so just trying not to get my my phone pwned.
Oh yeah, that is always a challenge. I want to ask just generally. We've talked about a lot of stuff, and thank you for being so generous with your time. What have we not asked you, or what have we not covered today that you've been thinking about a lot? Either ideally in related to Bitcoin, but I'm just curious in general, what's going through that head of yours?
Well, we talked a lot about monetary kind of stuff. I guess I have like a meta thought, which is like, what am I paying too much attention to? I guess would be my response. Like sometimes everyone focuses so much on what the Fed is going to do at the next meeting, as if it really makes a this sort of world historical difference, and not like understanding kind of the deep structural kind of things. And so like what I'm really focused on, and Bitcoin plays a role in this, is like the long history of kind of the modern era. You go back to say World War I if you really want to go back that far. Really kind of really understanding like what drives these big structural change. Because like if your thesis for Bitcoin is more than just what it is now, right? Like it could say plateau, and this isn't just one saver. Like there's a scenario in which it just sort of plateaus at, I don't know, a few $100,000 a coin, and it's like a baby brother to gold, or it's parity with gold, and it's got some reserve value, It's like very significant. That would probably be like a really successful investment thesis for anyone that's purchased it now, right? So like that would be like a big deal, right? Where Bitcoin sort of slowly monetizes to that level, but sort of stays at that level for whatever reason. Would it play as much of like it would be like a macro asset, but it would probably be at like the level of like, it's like half of gold. Maybe it's like the level, it's equivalent to like what the FANGs are doing. So big and important. Everyone's got to pay attention to what Bitcoin's doing. But it's already, Bitcoin's already sort of like that. But in terms of like CNBC reports on its price every morning and people talk about it because it's got sort of a certain, I don't know, captures the clicks or whatever. But like beyond that, right? Once it's in everyone's portfolio, or everyone has whatever they decided to allocate to it. Okay, that's like not that interesting though, from like this like long history of like world historical monetary geopolitical changes, right? I don't think at that level it would really play that much of a role, right? It would play like a marginal role in as much as any global asset plays a role. As reserve managers have some portion allocated to it. But I think it's more interesting is like that's like its reserve asset function, right? But there's only certain demand for reserve assets, right? Once people have as much of their liquid savings in a certain thing that they consider safe, they just try to keep it at that level. What's really going to move Bitcoin to become much more integrated as like a globally relevant like technology is what's going to happen on like the development side, right? It's going to happen on how much does Lightning get globally adopted? How much of these other applications in sort of traditional finance start to integrate Lightning into e-commerce, into retail payments? What are these other sort of third layer applications that are sort of hinted at but haven't really demonstrated kind of scale? And like that's where I'm most interested in seeing like the game play out on a technology layer as opposed to like the monetary layer. Like the monetary thing will do its thing. I think people pay a lot of attention to that on Wall Street because it's like an investment asset. They want to just capture alpha. But I don't think as much people in that world pay attention to like the technology side, right? Like, is this something that, is it all talk, right? Like, there's a lot of future visions of where the entire world is using Bitcoin through multiple layers. And you've got decentralized identity. You've got, a whole suite of more peer-to-peer kind of monetization business models that facilitate, fundamentally like a potential transformation of the way, basic economic activity like works, right? Like if you don't need to use a bunch of these intermediaries, you can do streaming payments for lots of different things. If you can actively monetize and capture a whole range of different types of activity in a different way, and monetize things that weren't able to be monetized before in a way that actually preserves autonomy, right? Like preserves and kind of like maybe rewinds the internet back to what it was supposed to be in the sort of the original kind of cypherpunk vision as a peer-to-peer system. That's to me like most interesting of like what would be like that would turn like Bitcoin from being just like this interesting and really good investment thesis to like a globally relevant like technology, right? And I think that's people sometimes mix the two. It's like, oh well, it means that if it's globally relevant technology, it must have been successful as a monetary investment. That's likely to be the case, but I don't know. Like I'm really interested in following like all those sorts of developments. And yeah, that's like with any technology, it's like just alone do I predict like the monetary and geopolitical arrangements is very difficult, right? Like what crazy new idea is someone going to have in 2 years that's only enabled by something that was done today, right? And how much is that like really the exponential process, right? Where like innovation begets other innovation. I don't know. But yeah, there's gonna be lots of like, I don't know. This is like, it's a fascinating topic because it goes into like, because if you think of that as being the potential end state, maybe not the end state by any means, you're going to have to like then also assess how it's going to have to integrate with the existing structures of politics and regulation and governance that already exist, right? Like the world isn't just adopting Bitcoin in the abstract, right? There's a whole like edifice, extremely, like established systems of power, of regulation, just institutional inertia that are going to have to react to this phenomenon in different ways. So that's like, I don't know, I'm trying to zoom out from what the heck the Fed's going to do and just like, what is this going to mean in the next 5 or 10 years? And yeah, I just think that, in my background, like I assessed lots of like tail scenarios, like most of them bad, right? Like what is the 1% chance of that bad thing happening that would have like a really dramatic consequence? And it doesn't, just because it's very unlikely doesn't mean you ignore it. If it has a major consequence, like you have to assess it. You have to like take that scenario seriously and then play it through and then see like, what you would do, what you think someone else would do, what the sort of second and third order consequences would be. And I think, people, I think, just have a blind spot with respect to these other topics that, like going back to the beginning, like are somewhat icky. And it's like, well, you're putting an artificial blind spot on. It's like, this is a potential scenario, may not be likely. Everyone has a different distribution of their, beliefs over how likely that is. But I think we're now reached the point where like the median belief should be like non-zero and should be like high enough to warrant taking like these potential scenarios of like Bitcoin monetizes to the level of gold or more, and scenarios where it becomes like a globally relevant kind of transaction medium, a payment layer for lots of different technology applications. Like that's, you got to analyze that. Like that's be like a new thing, right? Like you got to figure out what the implications would be. Now it could, again, I'm not a you might heard like I have certain cynic attributes, right? Like there's lots of bad things that can happen, so I'm used to looking at the bad things. I'm just like predisposed by my background, but I think you need to look at those different tail risks and tail opportunities, kind of with the same balanced perspective. So that's what I'm focused on.
That was a fantastic
lots
answer.
of interesting stuff in the news, but they sometimes give you a distraction.
I love it. Yeah, focusing on or trying to figure out essentially what is signal versus noise, and where is one being sucked into thinking about something that is not actually pertinent. Matt, it has been such a pleasure having you. You got your Twitter handle in your name on the screen, in your lower third. That's the word I'm looking for. But I would encourage everyone that is listening to follow Matt on Twitter. He puts out incredible content and very funny content as well. You always have a sense of humor. Is there anything else that you want to let people know about before we wrap the show today?
No, I mean, go follow BPI. I mean, we're doing some good work. I give a shout out to Troy and Margot and David Zell and Grant McCarthy, and there's a whole bunch of fellows on there. They're really doing really good stuff. And Andrew Bailey, the whole philosopher crew. I mean, it's a really exciting group of people. So if you're not following BPI or following those other fellows, you really should. I mean, there's some of the like leading experts in the climate question, the energy question, like these questions about the economy and regulation and policy. So really, I'm like the least qualified person in that group. And David Zell is like a one-man machine. That kid is like, I'm sure you know, right? He's in 3 places at once, constantly just grinding. I'm glad. I just feel like I'm old when I hear what he's up to. Follow David Zell, kind of the energy behind BPI, and he and Grant are really just like doing good work over there. I'm not sure how much your audience has like is in the C-suite of a Fortune 100 multinational and has questions about cybersecurity, geopolitics, but that's actually my day job is doing that. On the off chance that there's anyone like that has interesting geopolitical cybersecurity questions, that's what.
Funny enough, I know on good authority that both Nancy Pelosi and Mitch McConnell are viewers of the show, so their donor base has enough of that. And my last little joke of today is David Zell, literally, I'm staring at him, did not move or acknowledge your shout out.
Well, because he's probably in a catatonic state. He's probably just like, his eyes are just open, but he's not responding to external stimuli.
Yeah, it's true. He actually sleeps upside down like a bat. He just like grabs onto the ceiling with his toes and then just sleeps. And then when he's needed, he can sense it and he just descends and then starts screaming at people, and things happen.
You've seen that too. You've seen that thing where he looks like he's zipping up his human suit in the back.
Yes.
Yeah.
I've been talking about this for months, and you are the only person to acknowledge this.
I mean, we can get to the alien conversation and the lizard people, but I'm pretty sure David is one of those. Yeah.
100%.
He's definitely a lizard person. Like that, I have on good authority that David Zell, who is staring at me right now in this office, is a lizard person.
Yeah, he knows what's up.
Do you have anything you want to say?
I plead the fifth, and I'd like to speak to my lawyer.
I fucking knew it. God damn it.
You heard it here first.
All right, my friends, we're going to call it a session. We've got an incredible episode for you next. FedWatch with Ansel and CK. Follow Matt on Twitter. If you have not already purchased your tickets for Bitcoin Amsterdam, do so. Use code BMLive to save yourself 10%. Also, as I said before, the edition of the mag, the censorship resistant issue, is phenomenal. Get one for yourself. You will not regret it. Let's call it a show. We'll be back in a moment
We're
after
not calling
commercial
it a
break.
show.
We are. We'll be back in a second.
Yes,
CK
Fed
and
Watch
Ansel will
next.
be
What is up, guys? Welcome back to another episode of FedWatch. My name is Ansel Lindner, and I am here with my co-host, Christian. How are you doing, Christian?
I'm doing great. Recording from the same room as P as he's packing up so he can. Oh my God! I called him P, but his name's Q. Oh my God! I fucked that one up.
He's the
But
other one.
yeah, no. Recording from the studio. Q is about to go meet up with P and do some secretive recording. They're working on some special projects later this evening, but we're gonna have to hold it down for the rest of the day. Ansel, can you check your gear icon and make sure that it's at your mic and not your headphones, because your audio quality is not sounding too high.
Okay, one sec.
But for all the guests out there, I recently gave Ansel a huge shout out on Twitter, but he is putting out such excellent work, not just on FedWatch, but on his own content. I want y'all to go check out Bitcoin and Markets. You're dropping a podcast like on a weekly basis right now there in addition to FedWatch. And Ansel also has a great Telegram group where he is getting on and doing analysis on a daily basis. So I haven't seen Ansel creating this much content in a really long time. So love to see it. The world needs his signal, and people need to follow the man. So make sure to check it out. Also, Q, can you pass me that mag? Also, we gotta shill the censorship resistant issue. This thing is so freaking awesome. But I also want to show the El Salvador issue and the To the Moon issue. Inside scoop, we are raising prices. I'm raising prices on all of our legacy back catalog of magazines. I'm counting how many we have, and they are hella rare. So go to store.bitcoinmagazine.com, use the promo code, make sure to save, and BM Live. Yeah, there's Q. So make sure to save and get those mags before I crank up the prices, because it's my call, and I'm telling you, prices are going up. So get your piece of Bitcoin history today. And make sure to subscribe to get the best price on all future Bitcoin Magazine issues. The next one is coming out at the beginning of Q4, and it is going to be absolutely fuego. Ansel, back to you.
Yeah, thanks for the shout out. How's my mic now? Is it better?
Way better.
Okay, good. Yeah, I had selected, I think it was recording through the camera. So Yeah, I'm excited to come up to Nashville and see you in what, 3 weeks or so. We're going to get a chance to hang out in
Oh,
person.
hell yeah.
Even in Miami, we didn't get a chance to hang out because you're busy and all that stuff. So yeah, I'm looking forward to, is it September 10th up there in Nashville?
Yes, sir. Bitcoin Day in Nashville. Use promo code Bitcoin Mag 10. Geez, I blew that twice. It's BTC Mag 10. BTC Mag 10. Save yourself 10% off. Ansel and I, we've met each other in person now twice. We've shook hands twice, and that is it. Every single time was hi, bye. I got a million fires to put out, and Ansel is just kind of enjoying the conference.
A total of 4 minutes in 2 meetings. So this
Yeah.
time we're gonna hang out for several hours, and it should be a great time. So if you guys are in the Nashville area and they have tickets left, yeah, definitely use that promo code that Christian just shouted out and come join us. Bitcoin Day IO is the website you can go to.
I can't wait. Right. I'm emceeing, by the way. Dylan LeClaire, awesome. Tyler LaRouche, Tommy Marcheski for the Bitcoin Magazine team are speaking. Ansel, do you know what you're going to be talking about at Bitcoin Day Nashville?
Well, so far I'm just going to be on a panel with Kent, who was a friend from the Omaha Bitcoin scene. And so we're going to do a little kind of fireside chat about deflation, about interest rates and things like that. And then I'm still going to try to get my own individual presentation, but I haven't nailed that down yet. So to be determined.
The last time I presented at Bitcoin Day Sacramento, I talked about how no one is bullish enough and how Bitcoin is going up so much that you probably already have enough. So I haven't really changed my talk track. I will not be giving a presentation, but I will be emceeing, which is quite the honor, and I'm excited to present you and Kent up on stage and see what else we do. But until then, let's MC this episode of Fed Watch. Let's get into these topics. A lot to talk about before we get into, the everyday lesson about why it's important to be, critical thinker and why it's important to not necessarily go along with the everyday narrative, even those that are coming from Bitcoiners. But before we get into that rigmarole, let's get into the international central bank news.
Okay. Well, do you want to start with a Bitcoin chart like we usually do? We can just start with that.
Let's do it. Let's do it.
So can we bring up slide number 1, Chris, please? So this is the slide that I've been showing, or the chart I've been showing for several weeks now. We are above this kind of area of resistance by volume. So the kind of multicolored bars on the right, that is a volume by that price level. We have gone over that. So, and we're coming to the end of this kind of rising wedge pattern. So it's almost like do or die time. Is Bitcoin going to choose to break upwards out of this or down? Remains to be seen. I think it's more likely that we rally upwards still to that $29,000 level. But I think that this is crunch time for the price, and we should see a decision within the next week if we're going higher or not quite yet. Any comments on this?
Well, I know all my coworkers in the office, and the office is actually pretty full today, know that I have pretty much been doing shitty TA all morning, where I'm like, this is it, guys. This is the moment. This chart is coiling up, and it's either going to break up or it's going to crash down. So, it really does look like a lot of tension is just kind of like consolidating towards, that point on that little, wedge that you're drawing there. And, obviously not all lines are rock solid, but these lines look pretty solid. And you can just look at the chart. I'm looking at it at the monitor in our office, and, you just see those higher highs and higher lows, and that, a little bit less volatility. So we'll see what happens, but that's my shitty TA for the day. So don't take too much of it at heart, but Ansel's the one with the real signal here. But I don't know, like when you look at a chart, this spot looks very unique compared to, what you're looking at prior to this point in the chart. And when you look back these last few, like 6 months or so.
Yeah, absolutely. And some of the things that Bitcoin has been correlated with recently, like stocks, are rallying despite all the bears out there that are just, screaming at the chart. It still goes up inch by inch on the stock market. So if Bitcoin keeps that correlation, Bitcoin should rise. We'll see. But there's also other prices, like in my Telegram group, I've been really honing in on the oil price, because a lot of people are talking about that there is a really tight supply, yet the price keeps going down. So those two things don't really match. And the way I square that is by saying, well, demand is just falling more than you think, right? So yeah, I'm really watching oil. I'm watching the stock market and Bitcoin. I think those three charts can give you a really good understanding of what's going on in the market in general, in my opinion. So that's all I have for price. Should we move on to China?
Yeah, no, let's get into macro. And ultimately, Bitcoin's price, it might shoot up, it might shoot down. I think this is why it's important to have dry powder. If you can have cash flow, and put yourself in position to ride it out. You should have been buying this whole time, and then depending on what Bitcoin does, maybe you're in position to buy more. So just do whatever you can to insulate yourself. Again, the whole point about Bitcoin is Bitcoin's this new system. It's going to have growth where the existing system is decaying. That's where the opportunity is, and you need to be able to ride out the wave until we get there, because it's going to be volatile.
Right. All right, Chris, if you could go to slide number 8. So overall, over the last week, it's been kind of a slow news week for Bitcoin, but there was this interesting data release from China. They do this every month. It's their monthly release, and it was a shocker. So big time economic slowdown, slower than all the estimates over there in China. And they also did a surprise rate cut. So for audio listeners, after when we put this out on the podcast apps, the headline here is China shocks with rate cut as data show alarming slowdown. Central bank surprises by cutting key interest rates. Retail, industrial output, investment data miss estimates. If you go to the next slide, that is the kind of the numbers here, the important numbers. So industrial production rose by only 3.8% from a year ago, even though the forecast was 4.3%. And remember, China's used to growing at 7 or more percent. And so these numbers are just horribly low. When you go from 7% growth down to 3.5%, it's like slamming on the brakes in your economy. Some more numbers here. Retail sales growth slowed to 2.7% in July, lower than economists' projections of 4.9%. So one of the things that China is trying to do is switch from a production-based economy over to a consumption-based economy, right? So they need these retail sales to go up while they're having a demographic collapse. So it's kind of really hard to make this happen, and retail sales continue to slump. This is barely over 50% of the projection for retail sales. Fixed asset investment gained 5.7%, so that was actually pretty good, but the projection was 6.2%, so it missed by half a percentage point. And nested within that bullet point, I don't know if they're trying to hide it in here, but property investment contracted by 6.4% in the period, and that's the retail or the real estate sector contracted by 6%. Now, I don't really buy this number because we've reported here and they're reporting elsewhere that month on month, like in June, it was a 30% decline in property sales month on month. That is a gigantic drop. So I don't think that this 6.4 is really all that accurate. Perhaps they tweaked it to look the best they could. And even then it was still a negative 6.4%. So that's a big deal because the Chinese real estate is the largest asset class in the world. And lastly, here we have surveyed jobless rate fell to 5.4% from 5.5%. So on the surface, their employment looks good. Not quite as good as the U.S. quote unquote tight labor market, but it is the unemployment rate is going down slightly. However, their youth unemployment, which is 16 to 24-year-olds, hit a record of 20%. And that is the exact same as the U.S. actually in that same age bracket. So, and what if you're going to have like civil unrest, it's the youth that usually kick that off. So when you have unemployment of the youth at 20% in a communist country with lockdowns and a credit crisis, I think you're asking for trouble. So do you have any comments on that before I go into the charts, or should I just keep on cruising?
Well, yeah, no, I mean, I definitely want to talk about it a little bit. I would say, first and foremost, we've been talking about China on this show a lot, and it's really clear that they're in a really tough situation. And I think our response to that would be, communism doesn't work. Centralized allocation of capital, centralized control, top-down control of an economy doesn't work. And any benefit that they may have gotten over a short period of time, a couple of decades of, being able to paper over those inefficiencies of top-down decision making, like all of the slack is gone now. So really every single move they do is kind of, it's either with the market or it's against the market, and then it's effectively putting them in a worse global situation. So I think that they're in trouble. It's really shocking when you see globally the lack of employment in the youth. I think that that's signaling lack of health across global economies. Like theoretically, the youth should be the most productive, right? Theoretically, the youth should be the cheapest labor that, is sought after. So when economies can't put to use their youngest, most vital, theoretically most educated workers, comparatively to any other generation, the most educated, if it can't even put these people to work, like what are we doing? Like the misallocation of capital is just insane. So that was my next kind of point I wanted to make. And then third, most people in America, most people in the West still don't know that China is in this terrible situation. I guess people who are paying attention to macro understand that things aren't going well. There's like this news of issues in the real estate sector there. But I think that for the most part, this kind of idea that that China is still on pace to just overcome the West and overcome the United States, that's the typical narrative still. So unless you're actually paying attention to what is happening in China, there's still like this kind of almost like inevitable dominance of China over the world kind of mentality that's happening. And it's just not true. It just couldn't be further from the truth as when you kind of actually look at what's happening on the ground. I mean, Ansel, do you want to talk about that kind of asymmetry of the information of what's actually happening in China, and then, I guess the impression in the West of China and their power?
Yeah, well, I think the what would you call it? Overestimation of China stems from people underestimating the U.S. dollar, right? And also, the U.S. has been so globally dominant, and we've had all these expeditionary wars with our military. We've kind of lost the favor of popular opinion in at least geopolitical or foreign policy type stuff. So people kind of gravitated towards thinking China was going to be the new global hegemon. Plus, in the gold bug community, even long before I got into Bitcoin, they were talking about how China was just importing so much gold. And so they were going to be, they had this plan to take over the global economy and crash the US dollar and all of this stuff. But, as it has evolved, that obviously hasn't been the case, but people keep hanging on to their old bias against the US dollar and and for China. I mean, the way that the Thucydides trap thing caught on. So Graham Allison, can't remember exactly what year, but it was somewhere around the Great Financial Crisis, wrote how China is the rising power and the US is the declining power. And he used Thucydides, which is an ancient Greek writer. He used an example of the Peloponnesian War between Sparta and Athens, and how a rising power and a declining power are destined for war and to have confrontation. And then he said, oh, this is China and the US. Now, most people said China would end up winning that. And that also maybe got a lot of people down that path to form a bias for China and against the United States. But I'll just remind everybody, I mean, it's pretty simple. China's communist. Communism doesn't work. Central planning doesn't work. So that should be step number one. Just convince me that communism can work, and then I'll think that China is going to become a global hegemon. So anyway, that's all I would have to say about that. But I have some more charts here with their GDP. Should we go into that?
Yeah, I mean, let's jump into that. But I think one more point that you make a lot is that China has never been able to command power. China has never been able to take advantage of any sort of position of superiority for a long period of time. And a great example of this is, at one point, China had an incredibly powerful navy, one that potentially could have been comparable to a European power, and they self-sabotaged it. The emperor, destroyed his own navy, or the merchant class's navy, in order to try to defend their own kind of domestic superiority. So we could be seeing something exactly like this happen once again in China, where the communist agenda is greater than the manufacturing power or the market forces that have really thrived within China up until, through the last 20, 30 years.
Absolutely. I think Xi is, he has, there's this stat that I can't remember now exactly. It was from Michael Beckley's Unrivaled book. And he said like in higher education, the Chinese have to spend like 20% of their time reading the book of Xi Jinping and his communist thoughts. Like that's the kind of stuff we're talking about here. Xi Jinping really wants to bring back communism in a second wave. So, but really, I mean, I think we've covered this on the show before, but the Chinese initially, with the Great Leap Forward, they failed to institute communism, and it just, had horrible effects. So then they opened up, because in communist thought, the revolution happens after communism runs its course, right? So if you think about how we were supposed to go from an unequal society where the workers rise up and take back the power, that needs to go through a capitalist phase first. So China said, whoa, okay, maybe we just didn't have our capitalist phase. So they opened up and they created a business environment so that they could build up capital in their country. But they always had the plan, because they're communists, they always had the plan to have another revolution, to have another way of seizing all the capital, to taking control and having a second communist revolution. And I think that's Xi's plan right now. And so loyalty is more important than economics right now, and they're going to sacrifice their economy. That's kind of what I think is going on there.
Loyalty is more important than results. Loyalty is more important than reality. That's what communism is about. So sticking to the plan from on high, or from the leader or whatever, is more important than reality. So if you watch Chernobyl, like that is the vibe that you get when you're watching that show. You're just like, wow, the cringe of decision making in a top-down system is really quite unbearable. So that's what communism is about, y'all. So whenever you hear anyone talking good about it, it's about allocation of capital. There's no way they can allocate capital effectively in any way, especially compared to real market forces. That's how you actually allocate capital. All right. End of rant from me, Ansel. I know you got some more charts. Let's get into it.
Yeah, let's go to chart. Let's go to slide number 11 first, please, Chris. And that is a long-term chart of Chinese GDP. And you can see that it peaked out right at the Great Financial Crisis, about 15%. And ever since then, it's been slowly trending downward. There was a violent, obviously 2020 and 2021 with COVID, but now it's just kind of returning to trend, slowly going down. And that's my base case for the whole global economy, at least for the US and major economies, is just a return to normal of low growth and low inflation. That's what I think you can kick the can down the road long enough to have zero growth and zero inflation. And that's where Bitcoin comes in, is taking over. But I just want to point out that their GDP is just returning to trend. If you go to the next slide, that is showing the rate cuts. So they have some different, national PBO, the People's Bank of China, they set different interest rates. The one on the bottom in the red there is the 7-day rate, and then the black one is the 1-year rate, and that's the ones that they just cut. You can see that little blip down there on the end. If you go to the next slide, that is, I'm just going to read through this from this article from Bloomberg. So China's central bank cut both 1-year and 7-day lending rates by 10 basis points to a move economists said would have little impact since COVID controls have made households and businesses reluctant to borrow. New credit in July increased at a slower pace than since anytime since 2017. Quote, a rate cut shows the entire economy is in trouble, said Iris Pang of ING Group. A wave of mortgage boycotts by households over incomplete projects has made households nervous about buying homes, reducing the impact of lower mortgage rates, she added. So, yeah, they lower their quote unquote Fed funds rate to try to make it more attractive to take out mortgages, but people are actually boycotting these mortgages, and there's nothing to buy because none of these projects are finished. So it's just kind of, it just seems like there's got to be a saying for this, but like the tiniest correction when you need to revamp the whole thing, it's just too little too late maybe. So the economy's slowdown, which began in March as authorities in dozens of cities imposed lockdowns to control COVID outbreaks, has spilled over to major economies such as Germany and South Korea as China's demand for manufacturing goods slumps. Nomura Holdings Inc. said growth in the second half will be significantly hindered by the zero COVID policy and the downward spiral of the property market and a likely slowdown in exports as the global economy weakens. Quote, Beijing's policy support could be too little, too late, and too inefficient, the economists led by Lu Ting wrote in a note. We think markets are too optimistic about growth in the second half, and we expect a new round of cuts of growth forecasts in coming weeks. So that's all I have for this China situation. I think it's getting worse and no end in sight.
They sound bearish in that article.
Yeah, and then I read something also by Michael Pettis. He's a famous Chinese commentator, and he said that some people are actually starting to get worried because they're being so bearish in the financial press in China that they're worried they're going to start getting government crackdown on these bearish calls. So,
damn,
crazy.
I mean, if you can't even contain your fearful citizens that don't speak up against the system as it is, like if those people are even being bearish and they're getting out of control, like, wow. I mean, China's screwed. Well, I mean, we'll see what happens. We'll see what happens. I'd be very interested to see how things play out in the next 5 years or so. I mean, it's too. I think that this is a situation where if you make calls like, there will be revolts in 1 or 2 years, you'll look like a fool. But, by the end of the decade, who the heck knows what's going to happen? Pretty much anything is on the table, at least when it comes to political unrest and loss of credibility of these really entrenched old systems, the CCP, a lot of what's happening in the U.S., I mean, I guess Europe is not that entrenched and old, but the feuds are. So, yeah, I guess, who really knows, again, what could happen in the next decade. And this is why I'm so bullish about Bitcoin in that time frame.
Yeah, well, we can say that China's not going to probably return to its previous levels of high growth. So we can say that they're going to have to get used to growing like the rest of the world has been growing since the great financial crisis, which is not very much at all. And that probably entails some social upheaval. But yeah, I agree with you. So let's move on to Jamie Dimon's comments, because I thought they were pretty awesome, actually. And they give us a good insight into what these people are thinking, not only Jamie Dimon himself, but remember, he's the CEO of JP Morgan, and the Wall Street banks own the Federal Reserve. So I think that hearing what Jamie Dimon is saying kind of gives a glimpse into maybe what some candid conversations with Powell would be like, what the Fed is actually thinking. So I wanted to read through some of these. This is a leaked transcript or type of transcript, not a full transcript. It looks like someone was typing during a investor call. So Jamie Dimon was talking to some high net worth clients, and someone was taking notes. And I think that's what this is, because some of the sentences are incomplete and stuff like that. But let's go through some of these. So on the next slide here, there are storm clouds. It is a strong economy, so that's interesting. Consumers' balance sheets are in good shape. Businesses are in equally good shape. What you forecast, or when you forecast, you have to think differently. What is out there? There are storm clouds, rates, QT, oil, Ukraine, war, China. If I had to put odds on it, I'd say soft landing 10%, harder landing with a mild recession 20 to 30%, harder recession 20 to 30%, and maybe something even worse than that at 20 to 30%. It is a bad mistake to say there is just one single point forecast. So what he's saying here is, if you go by those probabilities, he's saying there's a 50% chance of either a hard recession or something worse than that. So I think that's pretty crazy. But he's also kind of tiptoeing around, because he's saying this is a strong economy. Consumers their balance sheets are good. Businesses' balance sheets are good. Banks' balance sheets are good. Jeff Schneider has been reporting that this won't be a repeat of 2008, because banks actually have pretty strong balance sheets right now. So exactly what is going on is he's kind of playing both sides.
50% chance of a hard recession or worse, or something worse, something he can't even speak of. Like,
that he doesn't know. I don't think he knows. So
this just makes me think of, one, it's humanly impossible to be bullish enough on Bitcoin, and it's probably humanly impossible to be bearish enough on fiat. So those two things go hand in hand.
Well, I mean, if he's thinking there's 50% of something really bad happening, I think that's what Powell thinks, right? And if Powell is thinking that, he's just like waiting to pivot. And what happens to Bitcoin when Powell pivots and starts QE again? And it's going to be crazy when that happens. So that's why I think it's important to look at this, not just from Jamie Dimon and kind of a leaked audio from his high net worth clients, but also what it means about Powell, because the big banks own the Federal Reserve. That's who Powell works for. Anyway, let's keep going on another quote here. So on inflation, he says, the numbers are so distorted when you have this fiscal and monetary stimulus. Have you seen a recession where unemployment is going down? Inflation is 8%. I don't see it will dissipate that quickly. I think the Fed had 4% by the end of the year. I think that is highly unlikely. And remember, JP Morgan owns the Federal Reserve, or at least partially, and he's saying he doesn't think that it's highly unlikely that they'll get to 4%. All right, continuing. If you ask the question, how are you doing? What are the prospects of your company? Oh, pretty good. If you ask them about their confidence, it's low. I think because of inflation, because of partisan politics, and a lot of leftover anger from COVID-19. I wish we had the spirit that we were all here to work together, but it seems we just got nastier somehow. CEO's biggest complaint is they can't hire people. I think what's interesting about this is that he puts in there politics, the partisan politics, and I do believe that. I think that the partisan nature of politics right now makes us feel worse. I think it makes us clouds our judgment of what the economy is actually doing. So I think that's a very interesting point that he brought up. What do you have any reaction to this quote?
So I think that the money printer is really the compass that leads everything. I think that the Cantillon effect is really like the map that that manages all of our incentives. And right now, the easiest way to get close to the Cantillon effect, the easiest way to benefit from the printer, the Cantillon, means those who are closest to the source of money inflows reap the most benefit. So if there is money production and you get that money first before the rest of the economy, you benefit the most. and it's like a waterfall cascade down from that first point. And guess how you get close to the money printer? Politics. So we see politics seep into every single aspect of our lives, and it's just toxicity. It's toxicity everywhere, and it's not market forces. It's like this weird top-down communism. It really is. It's not market forces. It's everything else. It's everything bad other than actually market-driven forces to drive our decision making, to incentivize us to act. So, I mean, I'm not surprised that all news is political news. I'm not surprised that all anguish is political anguish. I'm not surprised that the average citizen is looking for political solutions. And I'm not surprised that our business leaders, our banking leaders are blaming politics for bad behavior. And honestly, like, can't hire people. It's really hard to hire people right now because like the constraints are huge. Everyone wants way more salary than ever before. It's insane, honestly. Everyone has way more political baggage than ever before, both the company and the person.
Yeah.
And then beyond that, everyone wants to work. Everyone wants everything. So at first, if you got a remote job, it was a huge win. Like, that was a dream job. Now that's like the baseline negotiating point for all
Yeah.
employees. Like, it's really hard for an employer to kind of have the way in this environment. And then on top of that, the taxes, all the legal constraints, the benefits that you have to provide, all this kind of stuff, it makes it hard. And up until very recently, when that judge struck it down, if you had 100 employees or more, they had to comply with the COVID vaccine. Like, of course, it's hard to hire people. And then on top of that, the money printer is not with markets, it's with politics. So all of these things are stacked against businesses, and it's hard. I feel bad for CEOs. As a general manager of a business, I feel bad for myself. Can't wait for Bitcoin.
Yeah, I think people hate on Jamie Dimon a lot. He's kind of seen as this Davos man, right? One of these globalists. But I don't know. I've been thinking recently that the money interests in the United States are kind of pushing back a little bit against this globalism. And I think we get a flavor of that here in the next couple quotes. So if we go to the next one. This one is China. He talks about China, and I cut off the part about Putin, but this is China and Putin. So I'll just read through this. China. Oh, man, it's small print. I can't read it. Let me pull up I'm going to have to pull up the original piece. Sorry, guys. Okay, China has serious issues. Our neighbors are peaceful. Mexico and Canada. Their neighbors are India, Pakistan, Russia, and Vietnam. They don't have enough energy and food. We do. We use 10 million barrels of oil a day. We pretty much produce most of it ourselves. They use 14 million barrels a day, and they import something like 10 or 11. Those are 10 or 11 are going by pipeline or ship. A lot of ships that go by the oil tankers go by American warships. Autocratic management can work in certain things, but doesn't work in the long run. They kind of look at America and say, you have become incompetent and lazy. There is truth to that. We have screwed up infrastructure. We have screwed up inner city schools. But I think it is a mistake to say that America has the short end of the stick. We have the best military in the world, but we have overused it. You see what China is doing in Africa and Asia. We need to do that too. America needs to take a leadership position. People are making a mistake with America first thinking. We are spending too much time and money on foreign ventures that don't make sense. If we don't do trade with Western allies, China is going to cherry pick every nation. They'll give them 5G equipment for cheap. They'll negotiate deals, lend money. They are trying to do it in Latin America, our backyard. And then in a separate thing, he says, I think China is overreacting a little bit with the Taiwan thing. So interesting here that he's talking about some of the stuff I have been saying he copied my economic hurricane argument, and now he's copying me about saying that, the geopolitical situation of the U.S. is that we have peaceful neighbors. We're too with 2 oceans, great harbors, great rivers, great agriculture, lots of natural resources. And you compare that to China, where they're getting, over half of their energy imported right past our warships. So, yeah, passing it back to you, Christian. What do you think?
I just want to flex that we've been talking about this for months on this show. So thanks, Jamie Dimon, for listening. And to everyone else listening, this is where the alpha comes from. So whenever you hear anyone LARP about China's dominant position taking over the US, even Ray Dalio recently wrote an entire book about this. There is nothing in reality that shows that that is the case. So obviously China's making moves. Obviously China is powerful, but they're making huge mistakes, and the U.S. is still the entrenched power.
Yeah, and the U.S. has let its infrastructure go downhill, let its schooling go downhill, hollowed out the middle class. Well, that means we have area to grow. We can get back to basics and grow the economy. But anyway, let's go to the next one. I think you'll like this one, Christian. This is on climate change. He said we should focus on climate. So that's this. I don't think that's what he means by this, but let's keep going here. The problem with that is because of high oil and gas prices, the world is turning back on their coal plants. It is dirtier. Why can't we get that through our thick skulls? What if you want to solve climate change? It is not against climate for America to boost more oil and gas. So he's really a big drill baby drill kind of guy, I guess, is what he's saying. And he's saying that's good for the climate. So what are your thoughts on that, Christian?
I mean, this is the Alex Epstein argument, which is that, like, guess what helps us solve?
Yeah.
Like, yes, climate change is real. Yes, carbon is entering into the atmosphere. But guess what helps us solve those issues faster than they change? It's also fossil fuel powered technology.
More energy. Yeah.
So, yeah, the answer is more energy. That's how you solve it. And if you look at the stats, there's never been less climate related deaths than today. And that's because of, fossil fuel, for the most part, energy or energy abundance that's currently provided by fossil fuels. So I think the key here, and this is where the ESG people miss, is that there is no rationing our way to prosperity when it comes to energy. There is only more and more efficient ways to get energy. Right now, fossil fuels are one of the most convenient, efficient ways to do it. But there will be new ways to do it as well. And that's the key of Bitcoin. That's what Bitcoin does, is it incentivizes that. It taps into purely network forces to get us to that as fast as possible. So this is why we need to lean into Bitcoin. And honestly, guys like Jamie Dimon, I don't think it's going to take them that long to actually get it,
Right.
because it's really freaking obvious. Bitcoin is good for energy production. If you don't get it, I don't have time to convince you at this point. And honestly, Jamie Dimon and others will get it. They will get it. They get paid to get it. Bitcoin pays them to get it.
Especially if they're on the side of more energy production in the U.S. And if that is going to become kind of the elite position that the U.S. actually needs to pump more oil and more energy, I think Bitcoin mining goes right along with that. So that they'll come around. I have one more quote here, and that is woke capitalism. So this is, again, I'll have to remind people, this is Jamie Dimon, the CEO of JP Morgan, who is supposed to be like this elite Davos globalist. And he's in these notes, he's talking against ESG. He's talking against woke capitalism. He's talking for building up America and pumping oil, drilling for oil here. It's fascinating to me. So here's what he says about woke capitalism. You could ignore the bad part of society, not hire from them, not drive through parts of town. I think it is a mistake, because our society is worse off if we didn't lift everybody up. It is far more than woke capitalism. It is a good thing to lift up our fellow citizens. You travel the world and see things that work. Apprenticeship programs in Switzerland and Germany. If you have generations of kids, 17 to 25, with 20% unemployment, you can be sure you're going to have a social problem. Jobs bring dignity, household formation, jobs reduce crime. Everybody should try to help if they can. And man, this is sounding like a conservative politician, if you ask me. But what are your thoughts on this?
I mean, we're getting to the point now where woke capital is no longer good for business. It's eating itself. The left, to many degrees, at least the political left in the United States, is eating itself. The standards are so high that everyone is breaking them, and therefore everyone is a hypocrite and under attack. And it just cannot survive any longer. So on the Bitcoin Magazine podcast, I believe Brandon Green made the prediction that ESG, especially from BlackRock, as an investment strategy, will no longer be relevant in the next 5 years. And I would say if that's probably true, I don't think it makes it out of the decade because honestly, it dies. Like whenever people adopt it, they they go severely south. Like the biggest benefit of ESG is marketing. That is it. Its greatest success is marketing. Beyond that, and any real production and any real results beyond marketing, beyond selling, it's actually a complete and utter failure. And when matched up against reality, that's what happens. Look at Sri Lanka. Look at what's happening in Europe. Look what could happen in the global south if this stuff is adopted. So I really do think that people need to beware. I really do think that it's not going to take that long where these policies will wreck people. And it's, again, very interesting to see Davos man, Jamie Dimon, speaking this, this truth, if you will. I just think it's like you can't ignore it at this point. And it's going to be less it'll be more and more obvious and less ignorable, less tolerable as time passes by because adopting ESG brings poverty. And guess what? People hate poverty. It sucks. Especially if you didn't have poverty and then you're subject to poverty, you really effing hate it. So I don't think that people will stand for it.
Absolutely. I couldn't agree with you more. One other thing that I pulled out from this is he's kind of about the economy. He was unsure, but then as he moved more into social issues with woke capitalism and ESG and stuff, then he got more passionate or more concrete. So I do think that there is a little bit of confusion at these upper echelons of what exactly is going on. And I think Powell probably shares the same confusion at the Fed. So that's all I have on that. That's it, dude. That's all the slides I have. That's all the content that I prepared.
Beautiful.
Where should we go now?
Well, I mean, we're getting up against time here, and I actually have a hard stop at the top of the hour. But
Okay.
yeah, I mean, I want to say thank you to all the listeners, all the Bitcoiners who tune in every day. Appreciate y'all. We try to bring the alpha every single week, and yeah, I mean, I would say the biggest alpha that I think that Ansel has really brought is very early on pushing against the inflation narrative because the fiat system is completely broken, but we have to be able to diagnose it as effectively as possible. So that way our narratives are unchallengeable moving forward. And it's pretty tough to kind of swallow, being right about Bitcoin and then having people like say, oh gosh, Bitcoin was never an inflation hedge. Like, oh, the Bitcoiner narratives are wrong. So I do really think that it's important that we be critical even of the Bitcoiner narratives and we be critical of the mainstream macro narratives and we think about what is happening. And we also, we put Bitcoin into our mental model. So I think that that's super important.
Yeah, I think that's a good point. And it brings up this idea about maximalism that's been going around. There's been a lot of controversy on Twitter flying around that maximalists are bad for Bitcoin. But really, maximalists just want to do exactly what you said. They want to open up the discussion. They want to have a debate. They want to question everything, and that's only good. That's the same thing with science. That they're hiding something from you when they try to squelch debate. Same thing with Bitcoin. If someone's trying to tell you, oh, don't be so mean, don't be so close-minded about things, that they're just trying to get you to stop talking. And that's when you know that you probably should continue, that you're probably more right than they are. So I totally 100% promote debating this, even taking a devil's advocate position on a lot of things and debating stuff out. I think that's very useful. Steel manning stuff. So yeah, that's all I got for today, Christian.
I also heard that we got over 247 viewers on Rumble. So YouTube,
nice.
Rumble's kicking your ass on this day of macro.
I noticed if you go back like 3 weeks, our episode, the live stream episode with FedWatch, got like 9,000 views. I was like, damn. So that was your biggest Rumble viewership was like 3 weeks ago on FedWatch.
Yeah, let's go. Well, hey, you know the people on Rumble, they're watching the Fed. They're thinking about what's happening in macro. I love it. Thank you to all the Rumble viewers. I know that a lot of y'all are gold bugs. I just want to take a quick shot at y'all. If you think that we're going back to gold, you're crazy, because Bitcoin's the only sound money that's actually interoperable with the tech infrastructure that we've already built. So we're not going back. We're only moving forward. So sorry, you can get wrecked on your gold, but I still appreciate y'all. Come back here for the signal. We're not gonna just tell you what you want to hear. We're gonna tell you what's up, and Bitcoin has to be part of your macro thesis.
Gold bugs, I'm still with you there, guys. I still own some gold. Okay, so gold, I as hardcore as Christian, but I probably wouldn't say it as hardcore as he is. I think gold might have a little bit left in the tank, but eventually Bitcoin is going to take it over. So all of the monetary value that's in gold is going to be accrued to Bitcoin in the long run. That's
Ansel, the only future for gold is if Bitcoin's incentives fail. If Bitcoin exists and Bitcoin continues to exist, I mean, whatever, some fuel left in the tank. While there's confusion, people will be scrambling. But that's it. That's all you got. So if Bitcoin succeeds, that's all gold got. And with that, I'm going to sign out. Rumble people, I love you. YouTube people, I love you. Twitch people, I love you. Make sure to subscribe to Bitcoin Magazine wherever you view our content. Go subscribe to the FedWatch feed. Go subscribe to the Bitcoin Magazine feed, podcast feed. Follow us on Twitter at Bitcoin Magazine. Follow me on Twitter at CK_Snarks. I'll pass it to you, Ansel.
Yeah, follow me at Twitter at Ansel Lindner, and check out bitcoinandmarkets.com, where I do a free weekly newsletter. Comes out every Friday. And lastly, check out the Telegram channel that I'm doing, t.me/Bitcoin and Markets. I do a live stream there every single day. Some of them go on for more than a half an hour. People are loving it over there, so check that out. And that's it, Christian. Thanks, guys, for watching.
All right, Chris, are we just wrapping it up? Let's hit that commercial break. Buy a Bitcoin conference ticket. Let's go. Bitcoin Magazine.